and that's down there at your 102 level. So if we close below 146,376 at the end of the month, then expect a retracement up into this area. You can see they've left this behind, and they haven't gone back up to 192. So 192 is within the retracement range of a fall to 117. So, like, you never really know exactly which way the market's going to move. But if you had $100,000 sitting there, you could take $500,000 and just long to that and short to that and just let it ride, and you'll get both. So it's going to go up there, and then it's going to come down here, or it's going to come down here, and then it's going to go up there. For the sake of a bull market, you'd hope it comes down before it goes up. But yeah, that's effectively the monthly area that we're sitting in with potentially. Well, we've definitely got one incomplete move, and if we close down here in the next 14 days, then we have another incomplete move, and then both will play out. It'll either be that, then that, or it'll be that, then that, one or the other. So if we don't really have, like, we've got an upwards bias on the monthly, so then if we drop down, for a while there, it was really, really good trading because we had this. So we had this. So when this candle came down into this region, we swept the liquidity down here. Again, just note, didn't really go past this, which is why that's a level. And then we traveled up to 162, which is why the retard in the group just keeps saying long to 162, TP at 162, TP at 162. So that's why it was going there. And now that we've done that, we don't really have too much going on this. We have a short bias back to 122, which is not as bad as what our monthly one's going to become if we close a month under. So so this was 2 weeks. There's also a little bit of ambiguity here because this little candle up here, I think on some exchanges, might not be an accumulation candle, which is a bit weird. But yeah, you've got 2 weeks of accumulation broken by 1 week of distribution, fast punch down based on the 2, and then we might see this again after the month close. Or we could travel all the way up to there because it's all within that range, that higher range of 192. And then sitting there is your, like your previous Bitcoin blow off top. There's your blow off top. Long run up. Do not take a trade in continuation after a long run up. That's one of the rules. There's your tell. There's your target. Buying anything under 226 is fine. Just take your profit at 226. So for those spot buyers out there, that's going to be your blow off top from this big accumulation cycle that's happening now along that -0.5. And it's, just for giggles, like if the DW guy sounds like he's a bunch of fun, but like if you look at this, if you look at the monthly here, right? So 2 weeks or 2 months breaks 2 months. They left something behind up here because it never went back and did a retest. So, this is what every single spot buyer should have been looking at. Multi-candle break, dip. If you bought anything up here, sell at 141, rebuy 68 or lower based on structure. So play. Okay, so you sold. Okay, now you started to think about rebuying, but you didn't necessarily rebuy here, and the reason you didn't rebuy here is you've got these broken by that. Once again, hasn't tested anything. There's going to be another rejection. So that one's to 80, but you already had 68 as a target. So it's more or less telling you that, like, when you've got this, you're not going back up because the target for this is already lower down than the target for this. So then you sort of just keep on watching, and like, you'd have all the time in the world, because if you sold at 141, there's absolutely no loss to you as long as you buy back before 141. And sure enough, you keep on heading down, and you've created another subtle break there below, so that's telling you it's going to keep going down. That told you that was going to happen. Now you're going to go up. So that breaking that, you'd be looking for an entry between $14 and $7. Right, let's pause there. So it's left things behind. Here and here. So you're going back there, which is amazing news when you've just bought at between $14 and $7. And now it's just a matter of time.
For argument's sake, seeing as Ethereum really hasn't made the comeback Solana has, could you also show that should be the case on Ethereum then?
Yeah, I've never really looked much at Ethereum.
No, nobody does. I just find it fascinating you can point it out, but it's also a bit of hindsight, and I'm just a bit of a skeptic. So
Yeah. So you see this?
yeah.
And you see this. So if you were to, so that was your 2 candle, and then it's bounced off the base of the 2 candle, gives you a rapid move down. Then it's come back to revisit the first candle. So that's why everyone should have sold at 202. And then rebought 167 or lower. And in this case, I mean, it did 2 levels, so it went 167. It went down to the 109.87. And you could have bought there, rebought there if you wanted to. I probably would have got suckered in and rebought there personally, because I would have seen that, and I would have gone, okay, I'll rebuy on this retracement. So I probably would have rebought based on that candle, and then it would have gone down there. But you know, you can't be perfect every single time. But you could have sold at 141, bought back at $14 or lower, and then sold at 202 and bought back at 167 or lower, and now be waiting for 192. That's probably how a long-term spot holder should have played that. And it's all very measurable on there. So ETH, let's look at ETH.
For clarity's sake, I don't hold any ETH behalf of the $20 that's stuck on the rounding network, so I don't care about ETH anyway. It's just another example to show how it works.
I mean, another example, there's your 2 versus 2. 2 versus 2, retest dump. The moment ETH dropped, the moment ETH closed that candle, you should have been selling in this range and rebuying under 1800. So they're selling at $3,000 and buying under 1800. And ETH still has another pump in it, so it's gonna, it's given a tell here that is going to go back into there. So ETH's doing the same thing.
Yeah,
Yep.
to some extent, the whole market, of course, follows BTC as well, so I suppose it is kind of similar. I mean, I could ask you to take a dead token and see if it works there, but I doubt that works.
Nah, they've got to have a market maker. Like if it's a complete utter shit coin, it's never gonna move like this because it doesn't have a market maker. But like
the Wumble Wonder. That's
here's
what I like to call most alts.
Yeah, here's your your classic call to long 1-2 1-2 enter around the 1 because it's a it's a multi candle. Goes up, suckers a few people in, comes down, she goes. So that's a really good example of how things take off, and it's created support along the way. So there'll be another trade based off of this, which will support the price between here and here. But ultimately, that's the one that sent the price up. And what did it do? It left a little revisit. So I'm going to come back. So things like I really struggle to buy spot because I look at it and I go, cool, we've just had this run up and it's going to come back. So it's just the way price goes up and down, up and down, up and down all the time actually makes it kind of hard to hold anything because you just know it is going to come back down to 2.6 after it revisits whatever it's going to revisit. This is price discovery, I guess.
Would this also, in your opinion, work in the stock market?
Yes, it does. Yeah, it's harder to measure it because it's not 24/7. So there's gaps. It works on gold ETFs. It works on pretty much anything I've applied it to.
Yeah, but for example, I know a lot of people own a lot of Tesla. It's like 1% of my value, so I don't care. But just an example of something people might be interested in.
Yeah,
The others aren't really talking a lot.
I've never looked at I've never ever looked at Tesla. Is it Tesla Nasdaq?
Yeah, pretty sure.
Oh yeah, it's doing the same thing.
Is that the correct one?
Yeah, there you go. Engulfed, entry, long. Double engulfment. See, it's a little bit harder with things like this because displacements like these things need to be taken into account. Like you've got to subtract these numbers and it gets really confusing. This is kind of why I started using BitGet and why markets that are open all the time are probably a little bit easier to do this on. But like that there, like that would have been a short. That's a short. Looking at that, the displacement's smaller there, bigger there. So that's a short. Entry, TP, 239 down to 201. It's hard to say whether that's a long because the body open and close is kind of offset by about the same amount, so it's probably not a long. This would be a long, but the price hasn't revisited it yet. But if you just imagine copying that portion of the chart and moving it down by that displacement and that displacement, then these wicks have touched that, if you sort of follow my gist. And if you bring those two bodies down, then they have touched that entry point. And this is kind of where it gets a little bit hard, because the maths around fibs are basically opening price minus closing price times by the current price of one of those points times 1.168 gives you your target. But when you've got opens and closes that are displaced from each other, you actually have to go open and close, and then you have to take the difference, and then you have to minus these differences or add these differences to it for however many candles play out before your entry, because then it changes your entry. So the fib, like, quite likely, based on that gap and that gap, you'd have to pull that one down, shift that one down to smooth it all out, shift that one down. So it quite likely becomes that, and then from that point, that's your bigger entry, and that was your bigger long, up to, so it's much, much easier to do this on crypto because you don't have to worry about all of these happening.
So you're saying Tesla isn't a 27x from here?
I don't know. I mean, these numbers are entirely realistic. Yeah. Once you get above, like, the only 100% winning trade, like if you want to have a 100% win rate, it's trading something below the 1 to the 1618. That's 100% win rate. Trading something further than that is gambling. I mean, with trend, you'll probably get it. Against trend, you probably won't. If you try to do it with trend and you happen to be doing it into the point that trend actually reverses, then you won't. I mean, you could have easily predicted when to buy Tesla. I mean, if you wanted to day trade Tesla, you could do it exactly like you could crypto. It moves the same way. Yeah, I spent a lot of time learning, and then I realized it was all a complete fucking waste of time. So news is an accelerator. It's an excuse for people to trust that what just happened in the market, that sudden fast move, was because of this. Like, humans just need to rationalize. Like, we're mental like that. Like, we need to be able to go, the market just dipped 10%, 20% in a day because of the Japan carry trade unwinding. No, the market just dipped because they were going to do it anyway, and they'd left a tell, and they'd done that in the past, and at some point it was going to have to go there. And the carry trade became the reason to do it faster, because if there was no explanation to it, people wouldn't trust it, people wouldn't play the game. And if they don't play the game, then the wealth transfer between the poor and the rich, which is all markets are, it's about taking from people who are trying to use this to break out of the level of wealth that they're in into the next level. And if they didn't have a reason to, or a way to rationalize it, they just wouldn't play the game. That's why I don't buy lotto tickets. I mean, they genuinely, truly are random. Like, you may or may not win. So why take that gamble? I'd rather gamble on this because I can win. Yes. Yep. There will also be breaks on lower time frames because of higher time frame bias. That can happen. Like if you're trading, if you look statistically at how many times you get, like, say, a 5-minute move that might go wrong, that's going to happen a lot more than a monthly move that's going to go wrong. So there's, up here on my upper screen is all of this, and that's basically because you kind of want to keep an eye on everything that the market's doing across various different timeframes, because you'll get the basic structure is going to be a break, a retrace, and then a move, right? So if that's your basic structure, so you could be trading a 2-hour break and heading to the upside, and this happened last night. Right? It was a 2-hour move to the upside, and then we had a 4-hour break. So if we look at where was that last night? 2-hour move to the upside. 6 PM for bed. Who was that one? Okay. So we had a 2-hour break to the upside. This is not the candle that achieves the target, because this is the candle that created the break. The hitting of the target will come after, which did come here. But you see this really big drawdown that we had? Because if you actually structurally look at this from a 4-hour perspective, our 2-hour break was in here, but this in itself created a 4-hour break after the 2-hour, which meant we needed to come back down into here before we could then go up and complete the 2-hour and the 4-hour. So if you'd taken the 2-hour trade based on this candle, the moment you saw the 4-hour break, it was a case of cut where I am in profits because I'm going to get a second shot at this, and then you cut your profits, and then you forget your 2-hour move, and you now look for the re-entry of your 4-hour move, which is this entry down into here, and then the right up to take a double dip at it. So timeframes can create retracements. Like in that case, you were trading in a 2-hour and you got a 4-hour, and that's that thing where traders often say, "Oh, I got round tripped," and then I got stopped out, and then it went off to my target, and why was me, and why does this shit always happen to me? Well, it does it because you had a 4-hour break, which is going to have a retest and then a move, and it happened after a 2-hour break. So the moment you see that 4-hour break happening, you look at it and you go, shit, cut my profits, take my profits, re-enter on the 4-hour, re-enter on the 4-hour, take my profits again. That's how you trade that. So I've actually only had this for about less than a week now, but I've used good old ChatGPT and Copilot to build some customized alerts, which actually give you what all the hourly breaks are, 15 minutes through to weeklies, monthlies, and it's actually been quite helpful because you can see it coming, which without having to look. So as you can see, we've had a 6-hour break. Funny number. But at some point we're going to come back into that candle, and then we're going to get, another swipe at it. So if you were currently in some other form of trade, when that 6-hour break happens, you would then be very wary that you may come back down into this area before you then continue up. And at the same time, same moment in time, you got alerted that there was a 45-minute downside break along with a 6-hour upside break. So that's a pretty good indication that a retracement has begun. And it's going to be that. Yeah. Moves a bit small, but and that there is your backside rejection, even though it didn't quite touch the candle. And if you'd been patiently waiting, you would have longed that candle there. Yeah, so long, creation of short, short. Yeah. Multi-candle. That's a nice one. Re-entry, target. Tell, going to go higher. Re-entry, target. Got it?
I'm not gonna pretend like I got it. I understood what you said as in the English part of it. Just being honest, mate. Like,
Look at this. Look at that one.
I
That's
just
a
have to figure things out for myself for a bit.
Yeah. Yeah, I mean, just if you sort of just want to back test it and figure it out, you know, the easiest thing to do is you just set up your fill levels. Look at how single candle breaks react. Look at how multi-candle breaks react. Now those are your key things. You find multi-candle reactions are usually quite violent and fast. Single candles usually have accumulation and then a dip. Single candles are more reliable than multi-candles, but it's that's, and you can pick basically any time frame and just look at it. So we're not going to get over 145.75 without some form of retracement, and that was our violent short. So if you're 1, 2, 3, smash by 2, entry down. So that's quite often when you've got more candles like that, you'll get multiple plays. But this one here was guaranteed. This was not guaranteed. Take that trade, yes. Would you take that trade? No. Risk. Any questions from the crowd? Yeah. Not random. It's not random at all. Yeah. I think the main reason traders lose is just because they don't know when to TP. They get caught up in I'm up 30%, 40%. Yeah, it's going to go to the moon, and then they don't TP, and then they're down 20, and off they go. So it's really a case of not only knowing when to get in, but more importantly, knowing when to get out, and not being greedy. If you break it down and you've got sort of like a 100% chance you're going to get the 1618, as long as you measure the candle properly, And if you've got like I think it's 60% chance you'll get the 2, and then something really small like a 20 or 30% chance you'll get the 3, well then just don't go for the 3. Just go for the 1, and then compound the money. Hmm. Yeah. So fair value gaps are effectively candle imbalances, and the thing about price, it needs balance, right? So if you have displacements, opening and closing on, say if you have opening and closing differences on a 24-hour market, well, that's an imbalance. If you have opening and closing, or if you have candles that don't balance each other out, then that's an imbalance. Price likes to refill imbalances. It doesn't have to, but it really likes to. So if you know that structurally you are going to revisit a candle at some point, and if you know what it is going to do at some point, then the next question becomes, where do I find my entry? So, we know when we get this break, okay, we could keep traveling up, but one day we will come back into this blue candle. And when we do come back into this blue candle, we know that we get along from somewhere in this range up to 141. So then the question becomes, what would price be interested in doing while it's there? Think of it like it's going to, hmm. Mm. Yeah, this one's already played out. So this blue candle was the retest of this one, and this was the target being hit. Now we've got this one. Okay, so we know that we're going to go up, and we know 141 is now on the cards. The question is, like, are we going to go to 135, 137, 138? Are we just going to tap here? Probably not, because it's a single candle break. Are we going to go here? We don't know. Sorry, we know we're going to go here, but we don't know where in this area we're going to enter. So this is where things like, if you think of it like prices going to a fun park, there's going to be a couple of rides that it wants to take more than others. Not everyone wants to go and shoot clay birds and get fluffy teddy bears as prizes. Maybe people want to go on a roller coaster. So there's things that are just more attractive to price action, and one of them is fixing imbalances. So if we come down, we can see we have a break at a 30-minute level of this candle also, and it's a 2-candle break. So that means we're probably going to get a bit of a pump before we get a retracement back into this area. But forget about that pump in the meantime, so we'll just talk about what happens when we retrace into this area. Well, that's a likely candidate. Like, we're going to want to fix that and refill that. So let's keep winding it down. This gives us justification because it was retested already and it created a pump. So we know this is a good fair value gap where price is probably going to want to come back to. So we'll leave that there. And then we've got another one down here. So wick's not touching. Bring it forward. Another break, no retest. Another one down here. And another one down here. So, I mean, there could be something even more microscopic down in there, but these are entry targets, all in that lower area, so some of which below the 0, which it can do, all of which below the 0.5. So we're going to have a bit more of a pump up before we have a pump down because of what we saw on the 30-minute. But if we play it forward, there's our bit of a pump up. And now we come down. So that's our first entry target. That could be it. Like maybe we go up from there. So if you were to try and trade this, you could either be watching at a very, very low time frame to look at the structure, or you could be, because you're already at a really good, risk reward at this point. So let's drag that out, be super safe, and let's go 1 for 1. Take $1,000 bet and make $1,000. Right, so you could just enter there, or you could apportion it through these other areas down here, just in case it decides to go lower. Yep, target done. So we didn't get lower. We got our entry on here, and then we went up and got our target. So I mean, this part here is no exact science. Like figuring out exactly where it's going to go in there. It's kind of like, well, it went to the roller coaster, but it didn't go to the fun house. It's yeah. So I mean, you could have just put it there. If you put it there, you'd have to stomach maybe some drawdown while it went down here before it went up, or you got an entry and off you went. So that's the purpose of fair value gaps, or finding things within the candle where price is likely to go. And with a single candle break, you'd expect it to go somewhere down in here. With a multi-candle break, then, which is what, if we were trading on a totally different concept, if you're trading on a 30-minute, okay, because with a multi-candle break, you'll get a higher entry and a violent push. So you would have, oops, wrong box. So you can take all of these trades, by the way, like, if you're watching across the various time frames, and you can still delve into this a wee bit more if you want to. Like, you could look for 30-minute, but sometimes it does literally just bounce off the one. It doesn't pay to be greedy with the multi-candle breaks. But so there's a multi-candle 30-minute break here to here, and
can I ask just one more question?
Yeah.
Do you remember the market break, the market breaking structure with the war thingy earlier,
Germany,
like 1-2 months ago?
Yep.
Like I don't remember what it was.
Bitcoin's 1533.33 target set out 4 months before. Yep, I remember.
Yeah, but did you actually put up a stop loss, or what did you do to get out of that situation? Because it was clearly that this method was going to work at that moment of time.
Yeah, I wasn't in a long. I was short bias that entire time. Like, for about 4 months, I was short bias, because from the moment we hit, like on BTC, from the moment we revisited like 70k after the monthly break, everything was going to be downhill until we got to $53,333.10. And then after that, the bias was cleared. And so from a monthly perspective, it was really a case of, if you were going to have any long-term trade open, and I don't really keep long-term trades open, but yeah, any long-term trade should have been a short. I think like the equivalent to that on Solana was 202 to 167 to 109, I think, were the levels. And then yeah, anything after that was bias cleared.
But would you say you do put in stop losses, or
No.
How do you do it?
No, I don't do stop losses. No. But I mean, I always say to people, use a stop loss and keep it down under the the negative 0.5. Like if anyone was asking me how to do it, because I don't want to be responsible for someone losing their money if If there
I
is a
mean,
major,
I've seen a lot
major,
of traders that have had a lot of luck for like 2 or 3 months with their
Mm,
system.
mm,
They didn't use stop losses, and a few guys in the server, like one of them, almost made $1 million from like
mm,
50K in
mm,
3 months' time,
mm.
and he lost it all because he didn't stop loss. So that's why I want
Yeah,
to ask.
yeah. I don't. So I don't, yeah. I mean, I don't use a stop loss, but I also don't. I don't hold trades open past their targets. And once something has hit its minimum target,
Yeah, but
and
it's not guaranteed to always hit a target. That's my point. You think it does, but it really doesn't. Like
fact is,
the break of market structure clearly didn't do what you expected. Let's say
which
you were in a trade then you just
which
ride it out to zero.
which break? Which break you talking about?
The Israel war thingy, I believe.
No, it did. It did exactly what it was expected to do. So, like, check this out. It 100% did what it was expected to do. Covered that one right at the beginning. So this was your monthly. This was your monthly break to the downside. This was your retracement. This was your target. You were 100% short biased until you got to 533.1 on the highest time frame. You were short biased till you got to here. That, and as you can see, you really can't get much more accurate than that. Apart from, yeah, magnet tool doesn't work with that very well, does it? But yeah, that's. I mean, to put it in perspective, to figure this thing out took 2 months at 14 hours a day, back tests in the hundreds, and that move was always going to happen from that point. It's just a matter of time. And if you were to have a stop loss, I mean, this is a big range, but if you were to have a stop loss, it does need to be above here because you can have a liquidity sweep into there before the dump. Entirely possible. So that's where you were. And then you cycle down and there's no fair value gaps in the range. We've got a couple now. So on the daily, this one looks quite good because it's up in the 0.5 region. So probably something in that box. A little one up there, etc. It won't refine it down too much, but it could even be something above here, but it doesn't look like there's much. I mean, if you're trading, like if this guy was trading with $1 million and he lost it, he just, and it's 100% right. Like traders, most traders, good traders, well, they're 60-70% win rates. And the issue is that if they're not putting the same amount on every single trade, like let's say they take 1% risk on every single trade with a 70% win rate, they're going to be very consistent and they're going to make money over a long period of time. But people who take $50,000, make it into $1 million, and then think they can take $1 million and make it into 50 million, like they're probably going to lose because they're just upping their bet every time. And eventually, if they're not 100% win rate, you can't do that. Like you'll lose, and you'll lose more than you've won. So then mark those two areas there. Yeah. Job done. Uh, yeah, I don't know. Like it actually, someone said to me one time, um, how can price action be truly fractal if you don't have a bunch of people out there all buying in the same divisible frequency, buying and selling in the same divisible frequency by that of time and the way time can be divided? And I sort of sat there and I went, I sat there and pondered that and went, yeah, I guess not. Like the world has different populations and there's different amounts of traders in different countries, and how does that even work? Like, how can everything be so fractal? Like, how can the price move at a 1 minute scale as it does to an hour? Because human beings don't live like that. And that sort of really got me thinking that it's not random at all. And it's not about people buying and selling. And then just sort of after a lot more looking and looking and looking, you know, back in my previous job, one of the things I used to have to do was look at a lot of reports, tons of reports. And some of those things, sometimes you would see patterns in those reports, and so it's always just kind of been in my head to spot patterns. I've always been really, really good at it. And then all it really took was time to figure out, once someone had given me that little bit of inception, which is sort of like, this isn't random. Once someone told me it wasn't random, I couldn't stop. And then eventually I figured it out. It's not random. And yeah, it's a highly, highly, highly successful strategy. And the other side of it too is a lot of journaling, because first you need confidence in that it's going to work. And so when you've journaled like 200 trades on a spreadsheet and you've realized the only ones you lost were the ones you fucked up and just whoops. And then you sort of realize there is some rules, around it. Like, you don't, if this candle here, as an example, had broken to the upside, you don't take that long because it's after this big run up. And what you do is you remember it for the future because it's going to be a future price target, but it's not a long you would take in that moment because you never long after a large continuous run up, because it will most likely retrace. But in this case, it didn't try to fake you out. It just broke to the downside and told you it was going to retrace. And that's what that one was. And then after that, you didn't really have any bias anymore because we'd already met our target. I mean, we could come down lower, but now you have no bias. So trading on a monthly time frame after this move has now become effectively a gamble. You wouldn't look at anything on the monthly until you see a break back in the other direction. But you could go to a weekly, and there's so many other trades that you could basically be taking, from a weekly. There was a multi candle break in there, another break to the downside there. So we're in accumulation. The weekly, what are we actually in? There's a so this is where you get your tell. Like, this breaks this. So this is the example of the move you do not take. 2 broken by 1 after a large run up. Target not achieved. Left that behind. But from a spot buyer's perspective, go donkey deep. Buy as much Bitcoin as you want. Just sell it when it hits 74. Like, that's the kind of thing you can tell, from these charts. We've made a tell here to here by this. It's after a large run up, so one of the rules is you don't take that long. We know it's going to go here, and now it's down here at the negative 0.5 accumulating. And you could have seen that coming because it it told you on the monthly that it was going to break down, but it's also told you on the weekly that it's going to go up. But you don't take the weekly because it breaks a rule. But you do take the monthly because it doesn't break a rule. And all of this is fractal. So it doesn't matter whether you're looking at, if you forget for a moment what these times are that's at the top of the chart here, it's just candles going up and down, right? Doesn't matter whether they're monthly, doesn't matter whether they're 30-minute candles. That's an accumulation range through there. Different time frame, but that's an accumulation range. All broken by a single one. That there was your entry. That there was your target. Done. Too small a trade, dollar and cent wise, but it's all just fractal. Yeah, there's a couple of guys that are working on that. Yeah, it's...
All I can say is that I will have to think about this a whole lot more than just this one session. Let's just call it that. And while it might sound ugly to say it this way, but I hope you are still around in 3 to 6 months and are still successful, since you say you don't trade with stop losses. I find that rather risky.
Oh yeah. Yeah.
Like, if what you're saying is, I always put in $2,000 and I have more than just the $2,000 to play around with, for example, and you lose $2,000 once, but you have a high percentage win rate, then that's fine, of course. But I think that's a big disclaimer people will have to keep in mind, to not just willy-nilly adjust their, what's it called, their entry, like their position sizes.
Yeah, I always trade. So I never ever set a trade and leave it. Never. So I'm always monitoring it. Key thing is I'm monitoring it for higher time frame breaks that occur during the trade, because they would be an indication of a larger retrace that could literally take you down below your entry. And that was like that example of 2 hour and then followed by 4 hour break that happened last night. So I would never ever suggest people trade without a stop loss. It's stupid. But if you're sitting in front of it, and if you've done this as long as I have, and if you know how price moves, and if you've got all the alerts and you've got all the tools, then you can do it. If I had to have a stop loss, it would just be down below that negative 0.5, because that's about the worst case. That if you backtest this across the charts, the reason those levels are those levels is because they are all the ones that are very relevant. That's about as bad as it ever gets. And then all the others are just, price targets. Anything past the 4 has such a small chance of ever happening. It's just not worth trying to trade it. The 3 is sort of about your price target realistically. There's other rules, like time spent in accumulation within the 1 and the 0.5 quite often will mean that you get a liquidity sweep before you get the move up. So you can expect it to go down if it spends too much time down in that region prior to going up. And yeah, I mean, if you follow the 9 odd rules that exist with the system, it's pretty damn safe. There's quite a few people who aren't speaking up, but in the Discord group now, who are taking successful trades on a daily basis, and then sending me their little messages with how many hundreds of dollars they've earned today. It's quite cool. Yeah, I think it's 9, including get a good night's sleep. Because realistically, the easiest way I found to fuck this up is for you to fuck it up. Like you can do one of two things. You can lose sight of the win rate and exit and drawdown because you're just mentally looking at it going, I can't afford to lose that money, and that's going to be different. That's going to be different for everybody. And if you can overcome that way, just making sure you have a good night's sleep. Trading in the morning after you wake up, so that you've got the logical part of your brain is in gear, but the emotional part of your brain, which kicks in later in the day, is not in gear. Don't trade continuation of a large run up because market makers do run out of money. They will need to retrace, but do note that fake move, false move, or move to come later, because it will come later. And then you've got confidence and you've got a new bias on that time frame that you're going to get some form of long or short, depending on which way it's going to go. Yeah. And I always just suggest, like, if you're starting out with this, just focus on single candle breaks, because multi candles can have open and closed displacements. You've got to front run multi candle exits faster. You've got to front run them more, because although all those candles look like they open and close perfectly, they don't. In the order book, they really don't. And so instead of having to do all the maths like I showed you on Tesla there, you just trade single candles, because you can be a lot more precise with your exits. Yeah, can't remember what the other rules are, but most of them are pretty much just life rules. Yeah.
But if you are looking at the current chart, wouldn't you say you would rather be short biased than long biased right now?
No. I'd be long biased now. Long term. It depends on the time frame. Like it totally depends on time frame. Like short term, definitely I'd rather be short bias, because let's face it, there is a bull market. It's going to go up. It has to clear its downwards moves before it can go up. If it clears its upwards moves, we're fucked, because if it goes that way first, it's going to come down hard. So ideally you'd want to be looking for shorts, but it's not really how price works. Like, as you can see here, you've had a multi-candle break on a 5-minute structure, which leads to that move up. You've moved into a single candle unfulfilled break over here, which leads to that move down. Like, it depends on what time frame you want to focus on and how much time in the day you've got to do it. Like, say that if you just want to trade 5-minute candles, well, 2 5-minute candles broken by 2 5-minute candles. Entry in this region, long to here, long to here, long to here. That's your 3 levels. Right.
You always set the anchor of the fib on the body of the candle.
Yes. This is really important. Do not mess this one up. Use these fib levels and never anchor wick to wick. Right, you'll lose. Right, so it's. Oh yeah, it took a long time to figure this out. Long time. So
like my biggest issue is, how do I spot where I put my fib level? I think.
Okay, really simple, easiest part. Break. Like, if you. So reasonable run down. Okay.
Yeah.
If I was to get a move to the downside at this point, I would probably consider it a fake move. It's breaking a rule. But I got an up move. I broke these two candles, so I can fib these two. I can look. Yep, exactly like you see there. If I want to be safer, I could just do that one. All right, I will get this trade later, but there is a possibility that the price hits that one and then goes up and leaves that one for later. Right, so that is possible because it's a multi-candle break. So let's go here. We enter in the box and we scalp these levels here, here, and here. Okay. Boom. Hit the top one because it's a multi-candle break. Violent move back to the upside. TP1 at level 1 taken.
So you need to first understand that the fib level only only really works on breaks of the
100%. It's all about breaks of structure, and it's about revisiting a break of structure and what the minimum obligation of the price algorithms are when that occurs. So it's met its minimum obligation off the reverse side. That's it. Trade over. There is no guarantee you'll come in here or here. If you want 100% win rate, you're out. Like you're not in. Okay. Now it hasn't revisited this bottom candle, so let's adjust. And you can drop down and look for fair value gap entries inside this bottom range if you want to get a better risk reward or something. But let's not. We're not. Let's just see if we can spot one. Okay. Let's be super lazy. There's our possible entry. But the thing is, you could enter on the one. You're still gonna. What should we? 5-minute candles. You're still gonna win. But let's just say, for argument's sake, it's probably going to go there. And down. Oh, did we hit the one? No, so we just hit the one. And, yay. Down we go. And target one achieved. Okay. And target 2 achieved. And target 3 achieved. Notice the body close just exactly on level 3. That's when you know you've found it. Like that's when you know you've found the level.
Yeah, that's exactly why I'm asking how do you place the fib level. I feel like that's the most important thing for the strategy to even work.
Yeah, if you fuck up where you put the fib level, then you will lose. But this is why, like, my advice to anyone trying this is don't worry about multi candles. Just trade single candles.
Mm-hmm.
Try to find an entry somewhere around the 0.5, and it'll probably coincide with the filling of a leftover fair value gap at a lower time frame. And then only trade to the 1618 if you want 100% win rate.
So, for example, on the 4 hour, right? Like, I'm just trying to work with you here for 2 seconds. Like,
yep.
If I understood it correctly, right? I'm looking at the what's it called? The 2 blue candles into the yellow one right now. You want to put the body on the first blue one over the second blue one.
Do you mean
1200 your time? 1200 your time, I suppose. At least it shows 1200 in the bottom.
Oh, this one here?
No, further to the right. The 2 blue ones.
Oh, okay. These two. These two.
Yeah. And you would put your fib level on the second blue one there.
It would be
I
this.
understand that correctly?
Yes, correct.
Yeah, the second one.
It'd be this. Yeah, and then you would chuck this on, cut that off, and you would look for an entry in this range here by dialing down your time frames and looking for a point of interest.
Like seeing it is actually believing it, so I'm just like thinking out loud, trying to practice what you say.
Okay, that's the one. Still kind of high. That was a respected fair value gap on a different time frame. There ain't much in here. Ooh.
Yeah, like I found it hard to figure it out as well, so I'm just like...
That would be my first sort of point of interest. Like, you don't always get a trade, because sometimes what happens is you go too greedy and then it bounces off a higher level and off it goes. But these are, and other times you're in drawdown before it goes back up. But okay, so we've got some areas there that definitely are of interest. So through here down to here, maybe. Here.
Yeah, the 0.5 was hit there. So
Yeah.
you would try to take your entry on the 0.5
Yeah.
if I'm not wrong.
Correct.
And then try to get out at the 1.6 or the 2.6.
Yeah. So the like, if you've got a decent amount of capital to play with, and you want to make some longer term trades out of like a 4 hour, because like I say, with time being fractal, why the fuck would you trade a 4 hour if a 15-minute can give you the same money? Like, it just...
Sure, but I wanted the 4 hours. I could see a decent example there.
Yeah. But you could also just, like, if you don't want to have to take as many trades, if you don't want to be stuck behind the screen as much, that kind of thing, maybe you do just want to take 4 hour trades and take less of them. But your actual profit taking method doesn't have to be at the 1618 on a 4 hour, because you've got so much time to react to the market when you're on a 4 hour. Like, it's not going to just instantly dump back down and stop you out. So if you were to have taken an entry here with your first TP here and your stop loss under here, the key thing about this is you've got time. So if that generated you $1,500, and you don't need to be earning money every single day to survive, because you just take that 1,500 if you needed to. But if you didn't, then 1,500. So let's go 750 on that one.
On how much leverage is this profit taken even calculated? 20-30x you're doing, or?
Yeah, I'm doing like 30x, but it's not. Leverage doesn't really matter. It's position size. Yeah, correct. And that is 100%. Like, you're talking to a kid who grew up on food donations. Man, my biggest mental challenge in trading is fear of loss. Like, I cannot manage drawdown. Like, I sit there, I look at it, and I go, fuck, I can't lose this money. And it's a mental thing, which is why the rules are like trade in the morning. Logic has got to be overcoming, that kind of stuff. I want small positions in and out fast. I cannot,
Yeah, that's why I also keep my positions to 1% of my folio. Every time I try to go above it, I just hit a mental roadblock.
Yeah.
Like 1% of my folio is literally my expenses for a month right now. Whereas, like a year ago, I was living in a black mold infested shit house with drug dealers all around me and all that kind of stuff,
Yeah. Yep.
Well, now I live in a pretty good place and all that, and it's still just a mental struggle for me to go over, like, let's say, for example, 1,000 or whatever it is right now. So I just told myself, I don't care what my portfolio size is. I will just keep it 1% of my portfolio and
Yep.
nothing more. And that way I
Yeah.
can always recover it later on.
So I start the month, I put between $6,000 and $10,000 in, and from $6,000 to $10,000, I need to make $20,000. And I'm talking New Zealand money. It's not the same as American money, obviously, but and from a mental perspective, that's really fucking hard for me, given my upbringing. Like it's absolutely not easy. But what I keep telling myself is when and you're talking to a guy with $16 million worth of property assets who had $154 in the bank at one point. If once this money comes back in, and the whole reason I joined this Invest Answers group is I would like to look at some more long-term investing stuff where I can just put it there and not think about it for 10 years, Tesla or whatever. That's why I'm in here. That's why I joined. Day trading has been a means to survival, but I will probably keep doing it. But I'll do it differently. I'll put $100,000 in the trading account, and I'll still just earn $1,000 a day because I don't need more than $1,000 a day. Particularly if I've got $1 million sitting in Tesla. You know what I mean? Like the Tesla could be the long-term game, and the day trading will be entirely risk-free if you're only trying to earn $1,000 a day off a large portfolio size. So if you wanted to, and this here would be the trading method I will adopt. It would be that one there is the one you win.
How do you know how far out you want to try your fib level?
Well, you don't really.
Because you need to kind of drag it out, right, before it even functions.
Sorry, what do you mean? Do you mean how many levels do you know you'll get?
No. You click on your fib level, but if you click on it at the start, right, it's just very, very small on TradingView. And
right. Okay.
Like you need to drag it out at least a little bit because otherwise you get 10-cent steps or something, or 5-cent steps. So that makes no sense.
It's always body to wick of the broken candle in the opposite direction. So I'll make this super big. Delete this. It's always here to here. If
the
you're looking for
should always be on the other side.
On the wick.
Other side of the wick.
On the wick, there to there. It's always there to there. If you're looking for a long in this region, to go to that profit take. Always there to there. If you're looking for a short, find a break. That one hasn't happened yet. That's interesting. Our daily target is 155, and we have a rejection that hasn't happened yet at 155. Just saying. Where is it long? Okay. Sorry, where is it short? Where is a not complicated short? There is a not complicated short. Okay. So, all right. Single candle break.
Yep.
Fib underside of body to wick top
of the wick. Yeah.
Looking for an entry at the 155. Oh, sorry, at the 0.5-ish. There'll be something in there.
Yeah.
And then going down. This is what I mean by complicated break. Don't think colors of candles anymore. Just think where they open, where they close. This thing and this thing is 8 hours of accumulation because it went down to here, went up, continued up. Broken by 2 down under here, which creates 8 hours of distribution. This is more complicated. There to there. Looking for an entry in the 0.5 to continue down to there or further. Keeps going. That one keeps going. So focus initially. Do all your practice, do your back testing, do all your stuff on replay tool. Do it on just single candles, right? Because
yeah, I'm just going to take $10 positions until I get it.
Yeah, and
like I can lose $10 10 times and not feel it, so I don't care. That kind of thing. I need money to be put behind it because on paper trading I somehow just don't care.
Yeah, I'm the same. It's
I would just put like 10 or 20x leverage on $10 like 10 times to figure it out instead of,
Yeah. So always for those candles. Sorry? Yeah. So the break must happen in lower or equal. Correct. Yeah. So it's just about price movement and time. So if you went 8 hours, if you spend 8 hours to achieve a certain price on the upside, and you spend less than 8 hours to achieve a certain price on the downside, then the momentum over time is down. That's kind of it. And the momentum will typically be balanced by a revisit, and then it will create a move. And that's, yeah.
And from my understanding, you always want to be the, what's it called? You want to, let's say, green candles followed by a blue, or 2 blue followed by a green. Like you get what I'm saying, like 2 times positive and then a negative or whatever. Just you only do it on the trend break.
Correct. I mean, like say we look at this on a 1 hour, and you could start all the way up here, like if you had the balls to hold it, right? So this breaks this, retests down. This breaks this, retest, continuation. 2 breaks 1, 2, 3, 4, 5, 6. Just. You got to be careful of rounding errors because of displacements that you can't see, right? So this is so close to that maybe that's the true break, right? And I would personally take that as the true break because it's so close and because my retest went into that candle. So there, retest, dump, continuation. 1, 2, 3. 1, 2, 3, 4. Well, that's an easy retest. Continuation. Didn't break that. Retest of the 0.5. Dump to the 1618.
Yeah, and as long as you're not greedy and just take the 1.618 for your profit taken every time, you should be fine. That's what you're saying.
Bingo. And like when I look at what is happening on the chart there, all I see is momentum of price falling in a faster time than accumulation. So running through that one more time, it started there, momentum. Retest, dump, closed, under here. Retest, dump, closed, under here, here, possible rounding error, so not going to include this one. Body move, because I do not have another accumulation period yet on this time frame. Retest, dump through the 1618. Broken.
So you will keep adjusting
Broken.
your
0.
levels because it keeps breaking. So you don't take profit, and you just keep adjusting.
Oh no, I would have taken profit ages ago. I'm scared to lose. But But this is really how this actually is working, right? So this is more distribution over time. Sorry, more distribution in a faster time than accumulation. So it's expansion. The move is literally expanding to the downside. Retest to the 0.5. I now have new accumulation, but I haven't hit my target yet. So retest to the 0.5, down, down, down. Profit taken at the 1618. I have a new 0 point.
Yeah.
There's my new 0 point. Retest. Right? Or actually, sorry, retest there, down again to the 618. So that was it. Move finished here. Now, at the same time, this subtle break here, it's a 1-to-1 candle break, so it's probably not going to be a rounding error because there's only one candle involved. You don't have open and close displacements on a single candle in a single time frame. So now, this deep dive here was not only the completion of this.
The other Fibonacci you put up, yeah.
Yep. So if you were to take an educated guess on where your entry is going to be for your long, well, it's definitely going to be at that point at least, because it's got to meet its obligation to go down based on this. And then it's going to try and meet its obligation to go up based on this. So you'd definitely be entering here or lower. None of these entries above here would make any sense. And once you've entered here, your minimum obligation is to come back up to here. At which point,
I must say this is quite insightful.
We get a doji, otherwise known by people in the trading world as an indecision candle. Why? Because we've had a target. It's now got to make a choice. Does it keep going up, or does it roll over and go back down? Now, in this case, it made its choice by breaking and going to the upside. That was never a guaranteed target level that you were going to hit that. This was. If someone literally held a gun to my head and said, you need to put your entire portfolio on one of these moves or I'm going to blow your brains out, that's probably what it would take for me to have to do it because of the mental issue in doing it. But try to find one that fails. You know, if you follow the rule of don't trade continuation after a long downtrend, blah, blah, blah. Like, if you can recognize expansion with time, how time breaks time, then it's all very, very, very measurable. And it's just tricky enough to try and make it look random. But it's not random. Like, even just that. What do we say about multi-candle breaks? When you touch the multi-candle break candle, in this case 3 broken by 1, violent rejection. Boom, boom, boom. That's a really good, strong sort of resistance level because there was so much selling pressure in that 1 hour period versus the accumulation of that 3 hour period. And this is how ranges have tops and bottoms. Like, there'll be something over here that is supporting the price, which is this. So let's just chuck a box on there. So there's your support. There's your rejection. That is how a range works.
Yeah, like I said, I really need to just let it sink in for here. I don't think I will get a lot more knowledge out of this. I think my brain is fried enough as is. I'm not sure about Lord over there, but I think I'm kind of done. Yeah, but I mean, yeah, until it goes wrong. Like, you need to keep in mind that he doesn't use stop losses and that you need to keep decent position sizes, so if you lose, it's not going to kill you.
Yeah.
Like, it's true that he so far has a really high win rate, and that's great, but you don't need to put 50% of your folio on one trade.
No. No. Across different time frames, yeah. So, and I mean, I only, hmm, I only try to take maybe 3 a day. You can make $1,000 in 3 a day off a very low portfolio, and the way people understand risk is different from the way I understand risk, because when you see how this stuff plays out, it's different. You know, it's just the risk is really, really different. And yeah, I just and of course I will not be trying to make more than $1,000 a day, even once I have a lot more money to trade with, because $1,000 a day is a damn good income, you know. And I would also feel a lot more comfortable making $1,000 a day without any risk. What's that? What did we just do? 45.15. 45.15. Bingo. Yeah, yeah. That's actually a really good way of putting it. They get deferred. Yeah, and they actually. Bingo. And the reason I use a CX rather than a DX is you have the flexibility to add to positions. You can short within your longs. You can hedge. You know, so like even in the instances where, but before I sort of realized oh shit, don't take a continuation trade after a large run up. I didn't learn that instantly, right? So, but being able to then open a short to hedge that long until the short completes and the long recovers, and then realizing that the short will complete down around the negative 0.5 because that's the accumulation area of the long, and then you're back in the long, and then you're making money on the way back up. So, like when you sort of start to put it all together, you know, yeah, someone should just make a bot to do it, because that would take the emotion out of it.
Yeah, easier said than done, right?
Yeah. The hard thing I've found is anyone can make a bot that trades a candle, but trying to find those FVG entries across multiple timeframes, you know, someone needs to. It'd have to be some form of really good AI tool or something that actually works that. Yeah, if you want to just witness in the future a 15-minute trade that hasn't played out yet, just keep an eye on this area. It'll come down into here and at some point, and then it will go up. It's left a tail there.
So
down
you
below.
would say you should probably short here, right?
No,
No?
because you can only, like, where I see a lot of people fuck up is they think exactly that, like exactly that thought process you just had, is that the price is going to come back into here. Now, it could come back into here 10 days from now, and it could travel to the moon before it does it. All we know is that when it comes back into here, we know what it will do. That's the only part we know.
Yeah, I think my brain is fried at this point.
Enough for today. Yeah, I think a lot of people know this. Like, I think I just don't think they talk about it. You know, it's yeah. I mean, there's a lot of these groups out there that people pay to be part of, and they just get these trading calls, and these trading calls are actually pretty good. And yeah, I think there are probably a lot of people out there that know it, but they just keep it to themselves. because if you taught everyone how to do it, they wouldn't make their monthly money off all their subscribers, you know? Yeah. And trust me, I'll be digging into your brains for everything you know about longer term investing and all that kind of stuff when the money is back in the bank. So
Oh yeah, for sure.
yeah.
Shout out.
I'm looking forward
Shout
to
out.
maybe applying this to stocks because yeah, I've never ever looked at a Tesla chart until today, but I can see how it plays out exactly the same way. But I also just don't want to be. I don't want to be doing this all my life. Like, I don't want to spend 12 hours behind a screen going. This candle moved from here to there. So, it honestly does just feel like cheating. The only thing that you know I like about it, I do actually like the mental challenge. Knowing the hardest thing about this to me is the mental aspect of it.
Also, if you're looking for a guy that's actually good in stocks and options trading in the server, just send you a DM with the guy.
Oh yeah,
Like, I'm not a stocks kind of person, but he is. So I sent you both the name of the guy. Like, he's literally the guy in EA that does know a lot about stocks.
hmm
Just like I think DDUP is really good in the macro environment, for an example.
yeah,
Like certain people, I hold to certain values that I think they do know better than others in certain aspects.
yeah.
Like DDUP, for example, has been wrong on Solana for so many times now that it's hard to believe. But if it's just about the macro trend, then sure, he does kind of know. Like he took his profits on Solana at like $40-ish. And I
Oh,
told him to wait to the Christmas rally. I said there will be a Christmas rally.
wait for
We
wait
hit
for
almost
yeah.
$120 by Christmas. If he held on, he had what, like a 5x or something. That 5x had another 3x in it.
Yeah, and I would have been like,
So yeah, everybody has their own strengths.
202. Wait for 202.
Yeah, but like I say, like everybody has their own strengths.
Nice.
Yeah, but you get the point, right? Like everybody has their own strengths. Like I've got my shitcoin rules. Like take your initial out on a free X, this, that, this, and that, and it just works that way. Like Slaying Beast,
SYN full stop C.
Sin.c. Yeah,
Yeah.
just call him Sid. Just call him Sid or something.
my my name is Will.
Oh.
Well, time is just
Yeah,
fractal.
but you need
So
to not forget one thing. DDUP literally is rich. Like literally
yeah,
rich.
yeah,
I don't care what you say, he's rich. He never has to work again. If he had 5 kids and 15 kids, they would never have to work again. That kind of thing. So for him, it's not worth the time to sit in front of the PC to make a little bit of extra cash. He just wants to enjoy his life at this point.
yeah,
So he only takes the macro trades. Yeah,
yeah.
he just doesn't need to be in front of the PC to struggle to make trades. He's away 4 or 5 times a week.
He probably doesn't understand time quite the same way I do. Like it's all just no, no. I mean, movements are controlled top down, but every single one always plays out. So, like, you just pick a time frame based on the amount of time that you have available to trade. That's what you do, and you're not being greedy with where you take your profits, which means your win rate's going to be super high, and you learn how to map the moves properly based on the right breaks. And like I say, you got to know about the opposing forces, because the opposing force of this candle was always going to be to push the price down. The force of this candle was going to be to push the price up. So therefore, this one is going to create this deep dive, and that you've got to know that kind of stuff, because otherwise you'd be like, "Fuck, I'm in this drawdown and I've got to get out," and you would ruin your own trade, And that's whereas, yeah, I mean, you can. I just suggest people trade single candles. They back test until they have the confidence, and once your mind is blown, once you go, shit, I got 100 lines in this spreadsheet, and you don't have to spend a long time to do it, because there's a wonderful thing called Replay Tool. Just, quite often after I realize that I'm done mentally for the day, I will just chuck Replay Tool on, pick a time back in the past, and just flip through it, and just fib the longs, tick, fib the shorts, tick, fib the long, tick, fib the shorts, tick. And I'll do that for like 2 hours. And it just helps me to have the mental confidence that what I'm doing works. Because the only time I'm going to ruin a trade for myself is if I lose that mental confidence.
That's fair enough, I suppose. But yeah, everybody is a different style of trader. Everybody has their own things they're good at or bad at. Some people are just newer than others, so you have to have found their own, how do you call it? Strengths, I suppose.
Yeah. Even that, actually, that's an interesting one. 2 versus 2, liquidity grab, dump. Yeah. You can see this stuff coming so far ahead, like, see that? Two breaks 2, sizable enough difference not to be a rounding error or displacement. Time spent in the range too long, so therefore you're going to get a liquidity sweep. So that's one of the rules. If time is spent within the range for too long, they'll sweep, which is what they've done there, taken out all the stops that live above here, and then proceed down to target.
Yeah, but that's also something I've always been saying. Like, I've always been very vocal about range sweeps. Like, they will always sweep the late longs or the late shorts, whatever direction we're going. They will always do it.
So you probably, without even knowing it, you probably know a lot of this stuff.
Yeah,
it's just it's just never been put in a structured, measurable way. And yeah, and the key thing is, like, once you sort of have a measurement of it, you know that this move here is going to create a short down to this level. But to take the emotions out of it, you know that it spent too much time inside here. Because it spent too much time inside here, it's going to go here. So the emotions don't exist anymore, because you're in drawdown, but you're going, well, I'm okay. This is normal because of what it did there. And then, instead of you ruining your own trade and taking your loss and becoming a statistic, down it goes. Take your profit. So it's cool.
In this case, you are basically saying that going back to the -0.5 isn't that unusual?
No, not after a long time is spent within the 1 to the 0. In fact, it's absolutely normal, because this is inducement. This is the tell. So they've told you here the direction that they're heading. This is the inducement to build up shorts. This is the sweep of the stops, and this is the target. A lot of people would freak out and close their trade here.
Yeah.
A lot of people would have just had their stop here, above that high.
Yeah, that's exactly why they're going for it.
Yep. And time is about inducement. Boredom is about inducement. It's about people are going to start taking risks because of this. And then break to the downside. Up, break. Decent amount of momentum to the downside. Inducing more shorts. Take them. Go to where you were always going to go. So, yeah.
Yeah, and I can see why you're saying just take your profits at 1.6 because it's almost guaranteed to hit there, but
Yeah.
not the others.
If you were to jump on the replay tool, measure single candle breaks that are not after a large period of not after a large period of continuation in one direction, then have a look at what happens when price revisits them. The 1618 is basically a given, and even if you let's see if I can find one that failed. Didn't fail. Didn't fail. That failed. At least on that time frame, that failed. I mean, we know from that bigger time frame that was a dumb trade to take because the bigger time frame was always going to come down here. Okay, but that particular candle revisited here. Big dip down and up. So if you'd had your stop loss here, you would have got stopped out. If you didn't have a stop loss, it would have recovered. As long as you didn't have a liquidation point, depends on where that was. But that's there is a very small chance that that actually did play out. Just maybe it played out really fast. So sometimes you look on a hourly basis and you go, it didn't play out, and then you look down and no, it didn't play out. So that one didn't play out until later. That's an example of a trade that, depending on where you had your stop loss positioned.
This just shows you why DDIP is like just take the longer macro time frames and don't bother with the smaller stuff because they can be invalidated because the higher trend is always more important than a lower trend. And
You got it.
I think that's what DDIP always tries to tell people. But because he thinks people are stupid and he has seen many people fail, he says just nobody can make money on the shorter time frame because he saw too many people fail at it.
Yeah.
It might sound harsh, but he means it well. Like,
Yeah, I think I definitely 100% see what he says, because with the higher time frame having dominance over the lower, you've really got to have that directional bias, and then all you do is you trade with the directional bias. So if your directional bias on the hourly from back here, so if your directional bias on the hourly is to come down to 140.51, in this entire area here, you're just looking to trade shorts. Like, from that moment, and how, like, I know we're on an hourly, not a monthly, but how does this look any different realistically to when Bitcoin shot back up into that 69, 70,000 realm and then came down to 53, right? It's all just the same shit, different time frames. So we were short bias from here until we get to 140. Anything we're looking at in here is good. Could take that one. And then Down she goes. That's the win off that top candle. Still haven't had our target, so we're still effectively short bias. Still haven't had our target. So you could take longs in here, but there's risk, more risk, because you're longing into an incomplete short.
Sure, but if you go on a higher time frame, maybe it should have been a long all along, that kind of thing, right?
Correct, and it is until 192 and 226. All right, so there's 3 broken by 2.
And just for the sake of it, but like, let's say it hits 140.611 instead of 511. Will you just count it a rounding error or a rounding error?
Depends how many candles have passed. So yeah, this is too high up to be a rounding error, because it's only 2 candles in the move. So you might have a displacement in here between these 2 candles, and it might be 4 cents, 10 cents, that kind of thing. Probably maximum, 10 cents. And so therefore you would want to front run that, by say 10 cents.
Yeah, I'm just saying for the sake of it, like, let's say you move forward and eventually it hits 140.6, like, and it clearly is moving away from it. So at that point, should you just call it a rounding error and quit? That kind of deal.
Yeah, I mean, spending this amount of time sitting in one trade to make the same amount of money you could have made off any of these smaller moves that are within doesn't make a lot of sense. But no, like that there. To see that.
Yeah, that one was very close.
Like, you probably would have taken profit, because what would you have front run that by? 10 cents? Maybe not. That's 20 cents. 20 something cents. No, that probably wouldn't have been your profit take. But I mean, you could, it's up to you. You got to find your own sort of style and method. But like, I get horrifically frustrated and bored in these kind of trades, which is why I don't really like to take them, because you sort of go, oh yay, oh boo, oh yay, oh boo, oh yay, almost tease, boo, yay.
Yeah, that's exactly what I'm talking about. That's why on the one that was close enough, you were like, I'll just throw in the towel.
I mean,
kind of thing.
I took a trade yesterday because I felt like I stunk and I just wanted a shower. So I just took a TP. And I was like, I think it was me and one other fella in that same trade, because we've been talking about it. And I was just like, fuck it. I stink. I want to go have a shower. So, and then out I went. So that's just painful. But yep. I think we're going to see, I can't remember what time frames it's on, but I think we're going to see some more downside, unfortunately, for Sol before we see the upside.
I mean, that has been my bias for a while now.
Yeah, this one here is the one that's got me perplexed. The logical part of my brain says we can't go up from here. Like, so this is our daily. 2, 1, violent, complete. Yep. 1, we should be down in here. Shouldn't have done that. And I'm staring at that, going, we can't be going back to 155 from there. It's not normal behavior. But this is 3 versus 2, so this took more time, so that's not a valid break. That was 1 versus 1, retest, dump, but we haven't got any continuation on that. We've hit this, and we're holding it, and it doesn't make sense. We should be down in here. So there's something, whether it's inducement, maybe they don't have enough long stops to take at this point in that range, maybe.
I mean, sometimes you can look at the liquidation map out and see if there's any logic to it.
Yeah, I mean, I got introduced to liquidation levels by somebody very
Probably
recently.
Blue, right?
Yeah, and it's actually kind of an eye opener. So I've got those open on my other screen over here, and yeah,
Like
it's
if you
actually
look at the BTC liquidation, there's almost as much at let's call it 59.8 level as the 58.5 level. So you're in the middle of it right now.
yeah,
And that's the most annoying place to be if you're a liquidity trader. If you're just looking at Solana, there's still a move up to 142 to get some quick liquidity, right? But if you look down to the 136 level, there's a lot of Solana liquidity down there.
yeah. It looks like
But
liquidity is beginning to build down around the 139 even now. Like it's
maybe.
building. Yeah.
And Ethereum is also a lot of liquidity down to the 2570 level, let's call it that. So if you only look at Bitcoin liquidity, you would say you could go either up or down. But all the alts are showing a lot of liquidity to the downside right now.
Yeah.
So there's a good chance we are going down purely based on liquidity levels, not on anything else. I'm not saying it's perfect, but it should give you an indication if you should be a bit more short-term, short biased or long biased.
Yeah, agreed. Like it's what I've noticed in the few days that I've been looking at these liquidity heat maps is when you are sitting with mixed bias, they give you a pretty good indication of where price will go, whatever one is closer. So it's
Yeah, but if
yeah,
there's not a lot to grab on the upside, they will just push it to the downside unless there's a break in momentum, and the macro momentum is still down right now.
yeah.
You can call it a bull run all you want, but the short-term macro is down.
I mean, you see, you got this multi-candle break here
Yeah.
on a lower time level. That could be why we've bounced off the back. Could be why we've bounced off that. So that should be a starting point for a daily target. Down towards that 0.5.
Either way, I'm going to grab a drink right now. I'll be right back.
Oh,
But you take 0 trades outside of this system these days?
Yeah, this
Oh wow.
works. Stick with what works.
Sure, but if you're pretty sure you're going down, right, why wouldn't you go into a short right now? That's my thinking.
Need to make money faster. Not interested in the 4 or 5 days, maybe more, that it could take for us to come back down here. If I was going to open anything longer term, it would be a long, because we're going to go back to 226. But again, you'd have to open it with a liquidation point sort of below 70 really, because we could go down there. So that's so yeah, these are all areas of interest, which is very broad because that was such a fast move. It's very, very lots of areas in there, but you'd probably disregard anything, above the 0.5 and look for these other ones down in here. And if the price starts to reverse and head down into that candle from here, then what you'd look at is you'd look at the breaks like this. So that was a short down to 136. So if this structure closes yellow and the next one underneath it closes blue, then that would give you some form of new sort of refined target depending on how high that goes up. Like hypothetically, let's say it goes up to here, closes, the next one comes down below it, then maybe 134 becomes your next level as it works its way down into here. And then you could start watching on a lower time frame to find the key reversal that's down inside here somewhere, and then you could long it all the way back up to 155. But if you're going to risk, say, $2,000 longing from down there to up there, not so bad payday wise, but you can just look at a smaller time frame and get the job done a lot faster. With everything being fractal, why wouldn't you just take that? Or that? More risky on the lower time frame. It depends whether you're following the higher time frame bias. Like, more risky if you are literally doing it with like your entire portfolio and your liquidation point is within the higher time frame range. Yep. But if you've been a bit more careful about it, it will always fulfill. And you look at, don't trade tiny little candles like that. They probably will win, but trade that. Just be patient enough for the price to come back down into here. Or trade the 2 broken by 1 to there. See, trade the bigger moves in the lower time frame. If it's going to reverse on you, you'll see it coming because it will have a break of structure in the opposite direction. So, like if you took this trade and if you didn't know the system and you took this trade and you didn't TP here, which is where you should have TP'd, the moment this candle closed below these two, you'd be getting out and you'd be out in profit, but you should have been out already here. So it's, and then you could take your 2 broken by 1 short violent. So take the 2 broken by 1 violent long, 2 broken by 1 violent short. Expect a bounce off that candle, but you would have TP'd here already, so job done. That candle creates that little up bounce, move then fails, continues down, retesting the bottom candle, which was never tested after the 2 broken by 1. And there it goes, up. I don't know. I mean, I think so. It's see, you can have a static parameter as long as the candle sizes are different, and then it looks random. Like, if these are all different from different variants from top to bottom, then the rest of it can be static. And I think that's probably the easier method if you're running some form of market maker algorithm, is don't have different target percentages, just have different candle sizes within timeframes. I don't know. I don't want to figure out their mentality. I think they're just trying to keep it as random as humanly possible, have narrative to back it. I mean, my entire brain now is unfortunately wired a bit differently from learning this and understanding this. Like, I look at, so I ran a retail business for many years, and I look at court cases. Like, there's always someone trying to sue a business, right? And I look at the sentiment cycle and how it relates to the frequency of court cases. So when money is down, more people sue you. They don't feel rich enough to take ownership of their own issues, so they try to make it somebody else's. And then you sort of start to go, well, everything is just cycles, right? Like, when times are tough, expect more lawsuits. It's just a cycle. So you sort of you start to notice that human beings operate to cycles. Charts operate to cycles. Everything just operates to cycles. Once you start to understand how they all relate to one another, yeah, that's the real narrative. That's the real reason. Like, it's not about Germany selling. It's not about the Japan carry trade. It's not about any of the other stuff that just gets pumped out there to give us something that we understand. Because if we just thought along the lines of everything is a cycle, and everything has rules, then maybe more intelligent people would go looking for them. And they sure as shit don't want you to figure it out.
Yeah, sure. Just remember, a lot of people in the EA server are either copy traders, very emotionally invested, or just plain retards, idiots.
Yep.
No, I'm being serious. There's like maybe a few guys in the server of which I take some opinions. Some guys I take a lot of opinions, and a lot of people I just can't listen to. The most important thing of being in the EI server, in my opinion, is don't get swept up in their emotions, in their news, in their whatever they're thinking of right now. Just ignore it. Just like that whole sweep of politics came along. And the issue is that James is a YouTuber, right? So he shares the news, he shares politics, he shares this, he shares that, and that only makes the issue worse. So that's all I can give people for, stick to systems, stick to the charts, stick to what works. That don't get caught up in it.
Mm.
I heard a lot of people say they actually got worse in trading from being in the EA server because they got emotionally swept up.
Yeah, I've learned to ignore all the noise and just look at what the price is doing and where it's going to go. And then don't be greedy.
Like, how's it called? Like, I also have another split off group of the EA group. Some people already left the server, of course. But they are still in that other group. And, they're all very, very bearish. Very bearish, right? So, even if we, let's say, hit the $70 to $90 mark on Solana or whatever they have in mind, they will keep telling each other it's going lower, it's going lower, it's going lower. I told them that at 110 they should have entered along at least for now. They said no, it's absolutely going lower. I said not in the short time frame. Maybe on the macro, maybe you're right in a couple weeks or months, but not right now. Right?
110 to 162 was a weekly long, and or like 109 point something to 162 was a weekly long. Everyone should have entered at the sweep of the liquidity on the weekly, and they should have exited at 162, and then you move back into the waiting game, and for that next good high time frame one, and that's somewhere down. So if we
I actually made a FIB level back to it. If I exited on the 1.6 from the daily, on the 110 entry I did, I would have gotten to 156-ish on my take profit. And I myself exited on 155-ish. So I'm only a little bit off, actually.
I'll show you
like
the
just backtesting your FIB theory, right? So I say I enter this and I exit there, and I was only off by doing it with my own methods by like $1. I missed $1 of profit, sure. But I really didn't understand why those guys didn't want to enter along there, and they said, well, macro is still down and blah blah blah, and I'm just like, yeah, sure, but this isn't going to hold, right?
Yeah. You see
like
this?
The 110 was too steep for the short time frame. If they took along there like a 10x to the 156, that was a lot of money. Let's see, what is the tool called? Long position. Let's enter it around the 111 for my sake. How do you edit this thing? The settings. Entry price, that's fine. How do you change the leverage on the long position in TradingView?
Yeah, you don't. You change the position size. So, yeah, so it doesn't really. TradingView doesn't really focus on leverage, but like, let's say you opened because you were leveraged up, and you opened a $2,000 risk down in there, then your reward at target is going to be the difference, so $5,134 if you opened it there. If you got the liquidity sweep with the same risk. So let's say you took a really, really deep. Let's say you just keep your risk sensible, and you said, okay, I'm going to keep my liquidity or my liquidation level maybe 95 because we never really go that far down below the 0.5, even when we liquidity sweep. So if you'd entered all the way down here,
I will go crazy from all those alerts. Sorry, I just had to say it.
see? Yeah.
Those alerts are going to make me bash my speakers. I would be fine with the alerts, just not that sound. Like, it just sounds like my alarm clock, but now it's going off every couple of minutes, and I'm like, I'm gonna smash something.
I don't get a sound on those. I don't know why. I just...
Yes, you do.
Nah.
Like, I'm getting it from you.
Really? I can't hear it.
Wow.
Can you hear it?
Yeah,
Weird.
I'm just gonna mute your stream. Like, I'm not gonna get those sound bites anymore. I'm going crazy from it.
That's nuts. Yeah, I don't. That's weird. I don't hear it. I do hear it actually sometimes. It's like chirp, 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 or something. But
yeah,
but I don't
something like that.
I'm not. Yeah. Trading View is weird. I mean, if you got that one.
But yeah, like I said, like I just backtested that one trade I actually did, and I'm like, yeah, it actually quite aligns with your FIB level theory.
Okay, here we go. So there's your liquidity sweep. Bit greedy. Didn't quite get in. Okay, so yeah, maybe you entered there. Yeah, 114.
I mean, I entered it around 111, so I did really well on that one. I exited on 154-ish, 155-ish. What was it again? Let me check. I exited on 154, 155. I had a line on my chart basically, and that was my take profit from my TA basically. So it's not a perfect science or anything, but I was like, we just had it over the 154 something, and I'm just like, yeah, we just got over it. I'm just gonna take it. I'm just happy with like a 40% plus gain on a way too leveraged position, and I'm just like, I'm happy I did this trade. This is enough money to last me for a lifetime. Basically, I'm out. Bye bye.
Yep.
Like sometimes you just have to be like, okay, it could go higher, but what if it doesn't? Just take the money.
Yeah.
Especially after such long time frame moves, because it took well, only 3 days, but it felt like fucking 3 years at that point for me. So I was like, I'm out.
the first part, like, yeah. I mean, I'm looking forward to taking these types of moves with a larger amount of money with a liquidation level that's so absurdly low that it'll never happen until 226, and then after 226, then the whole story changes again because we have no bias higher than 226 for a long. So so this is for JG1. That's how you do the fib for a short. For a long. So when price re-enters the range of this candle.
Did you already react to what GG said, or?
Yeah. I'm just. This is what this is. So JG. You put the fib 1 on the top body, and you put the 0 on the wick low, so that when the price re-enters the range, which, as you can see on a high time frame, is a big range. That's your range. When it enters this range, the target is here. So that's your untouched candle, never got retested. Down she goes into the range, liquidity sweeps up to target. That's your trade. And if you were dealing with a short, it's the other way around. Underside body of the accumulation candle to the wick. Got a re-entry pretty fast on that one. Down we went. Okay. Gave it a second hit. Down we went. Gave it a third hit. Down we went. That's actually a broad range. That 183 down to there. Makes sense. And I guess this is why DW likes the higher time frame stuff. It's definitely
Less inputs, big amounts of money. But like I said, he just has so much money. Why should he still sweat the small stuff when he could be doing all sort of things? I know he likes to sport like 4 times a week and this and that. He rather does all of that and just focuses on the macro when he can and take the long time frame trades. He barely uses leverage, except when shorting Solana because he lost shorting Solana.
I mean,
no, seriously,
I would have. If I was in a position to do so a couple years ago, like I already showed you, like I would have shorted Solana between 141 and 68 with...
Oh yeah, I like leverage shorting after a bull run is over. That was my biggest money maker ever. I'm gonna do it again.
And then, I would have ignored this structure because its target is higher than what this is. So this was not a recovery because we still hadn't got to here yet. After we got to here, it's a case of waiting, seeing what you get. You just get more downside structure. The second level is not relevant because you can't go into negatives. So the reversal was always going to happen between 68 and 0.
Yeah. Yeah, thanks. Yeah.
And then here was your first reversal. And
yeah,
here,
you should test this out on the FTX token, if you will.
that'll be really interesting. What's that called? FTT, right?
Yeah, I think no FTX, right? Or was it FTT? It is. Biden says you covered.
Oh, look at that puppy.
Yeah.
2 dump. Look at that short. Look at this. Retest. Dump.
Did it hit your 2.6 yet? I don't think it's ever going to happen.
It can't because it's negatives. But, I mean, you could have shorted the shit out of that thing.
Clearly.
Like, look at that. 2. Look at the size of that wick. 2, violent, down. $48 to $25 was a given. So yeah, you could add some fun there.
Oh yeah, for sure.
That was your false move. That was your blow off top. So it actually started there. That's when you knew. That's when you knew it was poked. Because it went down, came up, did the liquidity sweep. Biggest mother of a liquidity sweep I've seen in a while. But I guess it's because they knew what they were doing. They took everyone's money, and down she goes.
Right after Binance told everybody that they were going to dump all their tokens. And that was just FTX protecting their peg. They were selling Solana. They were selling everything they had to keep it as high as possible.
I mean, realistically, this, broken by this, so these 2 candles, the fact that it didn't travel back to the 1, so this is just noise down here, right? Like, didn't travel back to the 1. Straight away you knew it has to go back to the 1. You could have longed here, because that broke that. And then they're going to travel up here, at some point, like it could have hit the 1 and then come back down and continued. But instead, they went all the way up, did the liquidity sweep above the 0.5, and then dumped. And everything was dead from there. Yeah, she was going to 27. It just depended on where you got your entry, within this bigger range. And for those people that entered up here on the liquidity sweep, then they'd be pretty bloody happy. FTT, down it goes. Boom. And the other side of it too is like you can look at just time frame support. Like the problem with a token like this is that that's your support there. This is support created by this. But you already know that this support is unlikely to hold because of this. So this breaks this, creates some support that's unlikely to hold because the target of this, if we look at this target, is right down at the base of that support. So the support it's created in the upwards move has a very small chance of holding because it's going to get bashed into by what has to happen because of this and this. So if that's going to not hold, then our next support is here, that tiny little thing down there.
Did you guys ever put your money into Celsius, perchance?
No.
Well, that token was actually pumped back to over $2 in June this year. I was for funsies just looking back at it with the VIP tool, and I'm just like, why was it $2 in June of this year? It's literally a dead exchange.
What's the token?
Celsius, the top one is fine.
Bybit. Which one's got the most liquidity? Do you know which one's got the most liquidity? Bybit?
I
Do you reckon?
I don't know it. I really don't know. It should be a dead token. But it just go on weekly or something. But like it's literally a dead exchange, and it pumped back in June to over $2. Can you imagine selling that at the bottom and then finding out it actually got back to some decent price, which you could have sold it off on?
Oh, look at that. Death.
Yeah.
That's a death. that's called a death. Look at that. Problem is, it can't do that because it can't go to -12. But it was going to go low.
But I'm just rechecking some random tokens, and these two, like FTX and Celsius, came to mind because I know they blew up, right? So
yeah. So here's your big short. So 2 broken by 1 on a monthly scale. So that's a big ass move in momentum. Liquidity sweep, death. And then the structure that it creates on the way down is that it goes to 0. I mean, the problem is you can't go to 0, so you're probably going to have to drop a time frame if you really want to find the accurate measure. And
here's another fun one I got on a backtest from the weekly.
Yeah, toast.
Yeah, but I exited that one at 3.2 something, right? And then I never looked back. But it would have been an amazing trade to also short after.
Yeah. Well, I think if you keep backtesting this, you'll end up with the same confidence I have in it. It's just, I've never really applied it to shitcoins. I probably should, looking at this. That's life-changing money.
Oh yeah, like I said, I'm not gonna use actual numbers, but let's say, for example, I made 30,000 in the bull run, right? I made over 10 times that shorting after the bull run was over. I didn't actually make $30,000 or $300,000 because I don't have that money. Trust me on that one. But it's more of I really made most of my money searching out shitcoins that haven't fallen enough yet during the bear. And I was like, okay, this one has fallen 50%, take profit. Oh, you have only fallen 10%. You're not going to make it either. You're next. So I was just moving my money to a new short position like every couple of days, seeing which alt hasn't dropped enough yet. And I kept going and going and going.
You see all this? See all this?
What?
You see all this range in here, like on Celsius?
Yeah. Yeah.
So effectively, this is all distribution the whole way through there. And if you look at the most recent distribution candle before the move up, being that little one there, and then you get the sudden smash to the upside. Okay. And if you look at all the levels it broke that, that, but not that. Okay. See that? That's your violent move. Multi-candle distribution broken by sudden accumulation, 54 cents to 76 cents, level 2, level 3. That's sort of how you can actually map it out, like on a larger time scale. Oh shit, level 4. And then something else. It's gone into something else and then it's rejected. But that's effectively how you could play that. Like if you bought it at 54 cents and sold it just near on $2, basically.
Yeah, I'm actually going to use this flip level thingy to make extra gains on my short from here on out. Like this is the loop ring thingy again. Like I actually exited that at the 3.2 like I said, and I would have just used the flip level on the daily.
Yep.
Took the break, blah blah blah, and I took the 1.6 level. That would have been already 5% cash in.
Yep.
In a couple of days, without even thinking about it.
Yeah, it's a bit
it's
creepy.
Just a bit more compact because I didn't feel like I needed to show the whole chart for it to make sense because I already posted it. This is just the part that matters. Like I am just backtesting on things I know I've done and kind of stuff, like it just makes more sense in my head to look back at trades I already did and see if it makes sense there.
Yeah. Check this out. So you're on loop ring. Break. Retest. 1, 2, 3, 4. That's
going on Celsius.
So that's Celsius. So that's kind of how you could have picked the 12-cent bottom from the $1.46, the dollar.
Yeah, but the exchange is literally dead. There's no reason for the price of the token to go up, honestly speaking. I know, but it just doesn't make sense to me.
Do you know why the price went up? Because they got to the 4. Because they got to the 4. So this here, 1 breaks 1. And look at the work on that puppy. Look at the momentum that brought that down.
Momentum? There's no momentum to be had. They're only down.
Yep. Momentum smashed it down. Fib that candle.
I can assure you guys, if Binance is gonna crash or anything like it, and we have or Crypto.com, for example, it is gonna die. Just take a short. Just do it.
Yeah.
Like this is what's going to happen to them. I'm not saying it's going to happen to those exchanges. I'm just saying if you hear the news they're dying and bankruptcy is confirmed, just take the short. Doesn't matter what your entry is. Just make sure you can stay solvent for the short.
Yeah, you see this.
Like, do you see that initial pump up? Like the really big wick before the really big wick down?
Yeah.
That was them protecting the peg. Like the really, really big one.
You see this?
Yeah.
Just, okay. That multi-candle break. So one candle broke 1, 2, 3, 4, 5. So 5 weeks worth of accumulation broken by 1 week of distribution.
Yeah.
Retested to the 0.5 at $4. Jump on your horse and ride that puppy.
Yeah, but this is why I'm saying just follow the news in that aspect. If you hear something is going to die, just get on that short in time.
And look where you
Like-
ended up.
Yeah, but you wouldn't hold it to the 4.6, but like maybe to the 2.6 because that was in a couple weeks or in a couple days, honestly. Just move it to the daily if you want to see how little time it took for the token to disappear from the 0.5 level. So you take your 0.5 entry and you got your 3.6 in what?
Yeah.
10 days?
So this is a really good example of how you can manage trade like this. So if you got your short in the 0.5 and you're aiming for down here, when the price passes the 1618, you move your stop loss to here. When it passes the 2618 and closes a candles under the 2618, you move your stop loss to here. When it closes a candle under the 3618, you move your stop loss to here. When it closes candles under the 3618, you move your stop loss to here. And then when you get your TP, you just made a short from the top.
I mean, that's what,
Right.
how much percentage is that?
Oh, I don't know. It's a 1 to, I mean, based on stop loss distance, it's only a 1 to 2.65, but it is literally shorting from the top. And
Yeah, but like that's 90%, and if you use like a 10x leverage or a 5x leverage because you know it's gonna die anyways.
yeah, and the method around moving the stop loss, and you can backtest this because it does work. And when I used to do bear money trades, that's what I used to do, and it was a case of as soon as you started closing below the 1, you move to the 1. Trade is risk free. As soon as you started closing below the 1618, you moved. This one you could have moved twice, right? Because once it had closed down here, you could have gone straight to there because it was moving so quickly. And then once it started to close down here, these candles, you move to there. And then you get your TP at the 4. The reason the 4 is the biggest number on my tool is you don't tend to get very much going beyond the 4. Before there'll be some form of recovery or retracement. And so therefore you had all that. And then magically, market makers decided to recover the token because they wanted to get people buying it. And then once people started buying it, what did they do?
Dumped
it.
Yeah.
So it's just, unfortunately, the aim of the game.
So
Right.
let's say you're in a token, right? And you want to hold it long term. You just put on the FIB levels on the first break on a daily. For example, I did that with Pipe just now. Once it breaks at 3.6, you can almost guarantee it's just going to keep falling off, right?
Which candle? Oh, sorry, which token?
Pipe, I can show you. I can just make a screenshot if you want.
Wife, did you say?
Pipe.
Oh,
Yeah.
pith. Okay, this one.
Like I'm just showing an example in Pive because, well, it was a top pick at one point for people. I got burnt on it myself, not gonna lie.
So this has left a lot of reasons to go up. You see, no retests. Right, so looking at it on the weekly, the dollar looks to be back on the cards.
Not with the inflation that's coming for that big boy.
Well, not yet, but bounce along here for a while and then go up to there. So that's entirely possible. You can look at levels that have already been tapped, like as an example, look at that. So there was a short when it hit there. That was a multi-candle break, multi-time frame broken by single time frame, entry short, down. But that's done now. Like it's finished. Now you also have a long. Okay. Now we're sweeping liquidity for that long. That takes us back to 44 cents. Now the thing is, at 44 cents, what do we have to reject it? Because this has already performed a rejection as a multi-candle time frame. So we have this, and 44 cents is within the target range for the short of that. So the price will head back up into here. And when it does head back up into here, you sell it. And then you buy it back between 37 and 30. And then every single thing in here is completed at a weekly time frame. But what we haven't seen yet is we haven't seen this. So once everything in here is completed at a weekly time frame, depending on the structure it creates, and that structure is going to be quite possibly, like we're now crystal ball gazing, but that structure could be this candle, because that's a big distribution candle. If it recovers that big distribution candle, and that wick is higher than that wick, so it only has to do that 1, 2, 3, 4, 5, 6, 7, 8. It only has to do that in the next 8 weeks. So in the next 8 weeks, if it recovers this point to that point, which it needs to do to get to 44 cents anyway, it's then broken 8 weeks with, say, less than 8 weeks. Now, if it has done that, then your next target level becomes 153. Now, comes 53 cents. 53 cents gets you pretty close to this rejection candle. This rejection has been performed at a multi-level time frame. This. Right? So that caused that, which means it's a single level time frame rejection that you'll get next, which will be this one. So effectively, if you had it now, you sell it at 44 cents. You buy it back around, say, 37 or lower, depending on the structure created on the way up. You sell it again between 61 and 69, somewhere in there. You buy it back again at 55. Then it's got an imbalance, a tested imbalance here that was created, tested, rejected, needs to fill that. Once it fills that, there's an imbalance up here that's never been tested, so it's going to want to fill that. And then you're into your top rejection candle on a single time frame there. So then you sell it again near $1. And then you wait for the structure and you look at where your support is, and then you buy it back again. And depending on the structure of your support, by that point, you're either out or you're going to an all-time high. So you can compound your money on something like that, because dilution will end. It's also got nothing to do with price action. Like, it's narrative.
Yeah.
It's how people justify that big fall. That's it.
By the way, for fun's sake, I also posted SoulChat and Nosana because those two were also really loved by the community. I already did the VIP level. Yeah, but look at Nosana. The dark blue lines were my TA lines. The white lines are the VIP levels. A lot of those actually quite align or somewhat similar.
Yeah.
If you think about it.
So Nosana is
I know
now.
it's hard to see, but some of them are literally on top of each other.
Yeah.
That's what I wanted to point out there on the Nosana chart.
So basically, it's hit its bottom, and
Nosana most likely, yeah.
and so a lot of those tokens have the ability to move up, and they're showing signs. And if you wanted to trade over a weekly scale, then or a daily scale or something like that, then that's the methodology to it. You just like you could have taken that long from that candle. See, this is a multi-time frame break. So the first long on this was there. That to that. To that. To that. To the top. That was your first long. Your second long is when price retraces the base candle. That was here to here. And there's all those other moves in between. But, yeah. That's fucking creepy, eh?
So, are we getting any refunds if we fuck this up?
No.
No. But I'm just looking at chat, right? And I just put in the VIP levels and everything. Just backtesting it on the daily, like forever, for right now, right? It actually did hit the 2.618 VIP before it went back down again, so it actually even works on this dead fucking coin. How does this even work?
I don't know.
Like, I'm literally on the daily on dead coin, right? Like, in my eyes, a dead coin at least.
You see this one?
Also, I bought like 100 cat coins at like 50 cents for if anybody wants to buy a Moonback. I just like the idea. It's only $50. What's gonna go wrong, you know?
I could see Pith. I mean, this is 3 candles. This is what?
I sold mine around 0.3. I'm out.
Actually, that's not 3 candles. Disregard that. Bye-bye.
Do you see that little wick up on the latest candle you're looking at?
This one?
To 0.3 or something. I exited there on 0.3 because I was done. I saw that another fall coming, I was done.
Yeah. So there's these 2 candles here. That's close enough on this time scale. Like, that's close enough to be a rounding error, like, or a displacement on 2 monthly candles. Like, yeah, you're talking 1 cent, 1 and a bit cents difference. So these 2 candles, that could have been the retest. 25 cents might be on the cards.
That's why I left on 0.3.
Yeah. But I
literally felt like it has no strength.
If I was holding Pith right now, I definitely wouldn't. Like, if I'd worn it that whole way down, now
I only bought a lot of it around 0.35 anyways, and I was like, I would rather have BTC miners and Tesla instead of this junk.
I would be exiting in that box.
Sure, but I'm not waiting for that box when I can get BTC miners and Tesla instead and only have a 20% haircut on my money.
Yeah.
It's the only thing I actually backholded that actually went below my price, like my buying price. Like my bonk is still up 50%, my Nasana on average is still up 16%.
Yeah.
Like, that kind of deal.
The tough thing is like realizing when you're just part of the pump. And it's like when you had a multi-candle, like 1, 2, 3 candle break, and that's your retest, and then you go off on your pump. The problem is that you haven't retested that properly, right? So not on this time frame. So it was always going to have to come back here, and they'll scream it's because of token dilution, or there'll be some narrative behind it.
Oh yeah.
But that's a wicked short even from there. Fair value gap tested, dump, and it hasn't actually retested. Like
this is why I'm saying
yeah.
that at the end of any bull phase, you should take shorts. This is really where I made my money. I know I'm an asshole. I know I'm a dick for saying that. I want everybody's life by shorting them or whatever. But it's all about making money. Nobody cares how you do it, right?
Hmm.
I mean, there's people that cry about it.
Yeah.
Yeah, but like I said, I made more money shorting than longing, while longing should be, technically speaking, infinitely upward potential, while shorting goes to minus 100 and that's it, right?
Hmm.
Well, I'm just a cynical asshole, like I'm always, pessimistic. So I have way more faith in a 10x leverage short than a 3x leverage long. That's just how I am. Sounds stupid, but if I know it about myself, right? Why don't I play to my own strengths instead of my own weaknesses? Like everybody has to figure out their own strengths. That's. I just hope we're not gonna lose another another round of people in the next 3 months who, ruin themselves leverage trading. That's all I will say. Like I actually miss quite a lot of the guys that were around it back then. Like Mr. Krabs, Ultra, Search and I mean, he did ruin his whole soul position, Solana, before he came back. That's why he took a break. Yeah, that's why he took a break. He said it in the Solana channel. Like, it's public, so I don't feel like I'm spilling the beans or anything. He told everybody himself he ruined his Solana position, and he took a break. Yeah. I mean, he went from 50k to 850k.
God.
To be exact. Also, do you want to know a fun fact? He's still gambling pennies. Literal pennies. Leveraging pennies on his public wallet he once shared. Because I still look at that wallet every now and then and he's still going. He's literally went from, thousands of SOL to not even one whole SOL, but he's still leverage trading that fucking 0.2 SOL or whatever he still has left. He's still going. He's just an addict. He's not a trader. He's just addicted to the leverage gambling.
I think if I had $1 million right now, I think I would just buy probably $600,000 worth of BTC.
Yeah.
I would buy $300,000 worth of SOL. Spot. Don't really care about what price it's at right now.
Wouldn't you be like maybe 50% crypto, 50% stocks or something like Tesla? A lot of upside still as well, that kind of deal.
I've got $16 million worth of property, so I don't really.
I got My bike is a sort of property. Maybe that's worth $100. So yeah, I got that
So,
going for me.
and I mean, the property's at kind of at the bottom of the cycle now, so it's like I'll look to sell some more of that later, which is also why I'm here. I want to learn about property cycles and stuff. I've just been lucky, bought and held it for a long time, but
Oh yeah.
I've seen it go up and down. But next time the property cycle's near the top, I'll probably sell some property and then start to look at equities, etc. But like I'd just say you chuck 600k, take $1 million, put 600k into BTC, have a 2 to 4 year time horizon maximum, and then you put some maybe 300k into Sol, start laddering out at 226 and above, and then put 100k in a trading account, and 100k in a trading account could quite easily earn you $1,000 a day with what I call completely and utterly risk-free trading, because you really can't fuck it up if you're trying to make 1,000 off 100 grand. And lucky, started young, had I just dropped out of school, got a job, started saving money. I just wear t-shirt and shorts and don't really give a fuck, and didn't spend anything. And then bought my first house, and then I was buying houses. At the time, I didn't know it, but I was buying houses, 20 years ago at the bottom of the previous cycle. And then, houses that I bought for like $185,000 ended up worth $600,000.
The thing is, right? I know the real estate channel and the IE server or EA or how you want to call it isn't that helpful. Let's be real here. There's not a lot of talk there. I know a few guys who do talk about real estate, and they say that maybe a crash is coming, like maybe 20 to 30% haircut on the current prices in the next 5 years. But it will be up forever. So yeah, you could shell it, but that means you should be fine with not getting back into real estate ever again. If you plan to sell, just accept that you're not getting back in, because it is up forever kind of a deal.
For me, it's more a case of rebalancing for liquidity. Like, it's, if I was to get rid of 30% of my real estate right now, I would be completely free of debt. But I also acknowledge right now is the wrong time to be doing it. So it's finding faster horses to put the money in once I get the money back from the wife. And something like BTC and Sol is that faster horse for a shorter time window. And by the time that time window has expired, taking the money out of that could also make me completely debt free, but it also gives me the ability to then sell some of the property at a higher price. And then just, it's more about rebalancing. Like the thing I've learned through watching James for a year is, I was really lucky. I started buying property 20 years ago, bottom of the cycle. We hit the top. We've retraced back a bit. We're going to go up a little bit more, but it's time to rebalance.
The Ali shot guy wants to join the voice calls. Can I just put him in? I know he talks with you a lot more often.
Yeah, bring him in.
Yeah, I just saw him DMing me, and I'm just like, I'm fine with it, but I will ask before I do that.
Yeah, I have tons of DMs, but I haven't looked at any of them yet. Hey, Ali. Sorry, I wasn't watching my DMs.
He's not in the call yet.
Oh.
Yeah, I did put him into the group. Either way, I'm going to have a smoke right now, and I'll be back in like 15 minutes or something, if you guys are still here.
Cool. No answer. I'll just reply to his DMs. Oh. Why can't I add him? Wounded. Now, anyone else got something they want to talk about? Well, we missed. It's a picture of that Chucky doll. That crazy Chucky doll. Or actually, sorry, it's not the Chucky doll. It's oh, what's that haunted doll that, like, unable to be debunked haunted doll? Yeah, it's the one. It's Annabelle. Yeah. Yeah, basically. Yeah, creepy, cursed doll. Just that's a 30-minute long that we probably should have been in, but weren't. After a 30-minute short, so notification at 9:30, entry down in the fair value gap. Now the price is just sitting there, but still, that's yeah. So I just got really bored and used ChatGPT to make some. So it's that, and then yeah, and then it just and then I've just literally gone through one time frame at a time and just put it on all of them, so that, because when you get like you've got to know the highest time frame move in play, because you might get a notification like this where you've got a 45-minute time frame which is indicating an upwards move, but you've got a 2-hour time frame indicating a downwards move. So both of those are going to come through at exactly the same moment, and one of those is effectively the retracement for the other one. So if we find it's that one, so you had your 2-hour break to the downside, and then that was your target getting hit there, and then that flipped into an upside break, which is that one, and up we went. And realistically, you should have been in the trade from over here anyway. And this is where a 2-hour trade broke to a 4-hour, I think. So that was, where are we? 14. Two-hour break. Opened 15. Oh, no, it'd be 16. 14. 16. 18. 18. That one. So that break, that alert, was this entry and this target, but you then had this one at 8 o'clock. So if you look and see how these candles actually played out, the problem was before we got our target, we had a 4-hour break closed, which created a secondary retracement and then up to the target. So knowing the timeframes allows you to understand why you're pulling back. And so wherever you were towards the 2-hour target, when you got that 4-hour break, you cut your profit and then you re-enter on the 4-hour and then ride your way up to the target again. And the 2-hour target will play out if it hadn't already, which it hadn't at that particular break point. So that's kind of the purpose of this, is to understand what higher time frame is in play and if any other higher time frame kicks into play while you're in something. So you're in a 2-hour long, 4-hour kicks in, exit your 2-hour long, re-enter on the 4-hour, take the 4-hour long. But you can take the 4-hour long to the 2-hour target if the 2-hour target's higher, because it hasn't played out. You've just got to bet, yeah. I mean, one of my biggest fears is that they'll change it, but I also now completely understand how I found it in the first place and how easy, therefore, it would be to find it again. Like, it's... Yeah. The static parameter is that the markets need to keep moving and something is moving them. Can someone try to add Ellie? Because he won't, like, for some reason it won't let me add him. In the group. Oh, he is in the group. Yeah, I think I just did the wrong button there. Add friend. Yeah, it doesn't. Hey, Ellie, have you?
Hello, how's it going, guys?
I can't add you to groups for some reason. I don't know why.
I didn't know groups were a thing on Discord, but I'm glad they are.
Yeah. Weird. Oh well. Yeah, we're just chatting, chilling,
Cool.
showing moves.
Yeah. Lots of just tight. We're really trading in a very tight range at the minute.
Yeah.
What have you guys discussed so far?
A bit of everything, really. How it works.
Yeah.
How FPGs matter, and longs and shorts. We actually looked at a couple of shitcoins and things that went to near on zero, and it was bloody eye-opening that you could actually have made some 400% trades and shorted them the whole way down, and all the indications and signs were there that it was where it was going.
Yeah, it's all in the candles. I mean, the mind-blowing thing for me was when we whipped out the high time frame charts and we started just taking a look at moves to the downside that were really, drawn out on the maps way in advance of when the moves played out.
And then they're either slow falls or fast falls, and fast falls will have some kind of news or narrative to push them quickly, and yeah.
How are you guys trading the setup here and now?
I don't have any
Solana,
actually, but I mean, if I had a trade open, replay tool was on. If I had a trade open, it would be this one on the 30-minute.
Are you sharing anything, by the way?
Oh, sorry, I disconnected by mistake. Share screen.
Mas não. ¿Cuál?
There you go. Yeah, it would have been that one on the 30 minute.
What's up, dude? Nice to meet you on call. We've been chatting back and forth for a while now. Anyway,
Oops.
yeah.
Where was that fair value gap on that? That candle. So there's your break.
I still can't see your screen. Can you guys see Sindot's screen, or is it just me? Okay.
And
Watch
there's
stream.
your,
Okay, got it. Yeah.
There's your confirmed tested fair value gap for your entry. And back to 30 minutes. So yeah, that would be the trade, like if we had been doing this. That would be us.
Yeah.
And there's nothing really in there to send it back the other way, so
Yeah, I see accumulation building, but I don't see it building above of significant distribution.
So you got a
At least
2
not
for
yet.
2. Yeah, you're actually in this. So you got a 2 for 2 here, and you haven't gone there yet. So this is probably a smaller move within the greater move.
The greatest move to the downside that I'm seeing was the 2-day break. So if you pop open the 2-day chart, your indicator has actually been quite handy. Just not having to kind of scan through every little bit, but yeah, you see that big ass break over here.
That puppy, 133.
Yeah, so that's exactly. So I don't know. I mean, we're in this tight range. There's some liquidity to be had below us. I'm thinking maybe one more move to the upside, possibly touch 143 and then back down again. But I'm looking for further confluence to confirm that.
Yeah, that's been there, done that.
Because that move played out. Yeah, that move.
Well, on the 2-day, it technically hasn't, because it. Oh, actually, yeah, maybe it has. Retest, then there, yeah.
Yeah.
Yeah, so it does look like we've probably got a 133. Yeah, so we've got. I mean, that's a pretty decent crash from a liquidity perspective.
Mm.
Wonder what's down there. Has anyone got a heat map that shows that far down?
Let me pull it up and see. Far down to what price?
133.
Okay, not on this traditional heat map, but maybe if I zoom out to the 3-month, just give me a sec.
Back. You guys still busy? Oh.
Yeah,
Yeah.
we've got a little bit here. Let me pop it into chat.
Hey, boys and girls.
Though.
Who wants to TP? There you go. So we should have all just taken that, and then it would have paid for our time here, right? Yeah, 133 is definitely on the cards. Question is when looking at the heat maps, there doesn't seem to be a huge amount of liquidity there. Like, you'd almost think that they're probably going to want to induce more longs, like take the price up a bit more first, get more people longing with their liquidations down around that 133 mark. Once that gets really, really bright and shiny, expect another stupid news event or something to come out in the fall.
Yeah.
Or why worry about it? Just trade 30-minute moves, and an hour later you've earned the same amount of money.
For trading 30-minute moves, are you looking at higher time frame bias first and then trading within that bias, or do you just pop open the 30-minute and just play with that?
Well, the bias is mixed because you're down to 133
Exactly.
and you're up to 155 and you're up to 192 and 226. So I think if you tried to trade the high time frame bias right now, you just wouldn't take a trade because it's both.
Just a lot of decision fatigue. Yeah.
Yeah. So I think you're almost just better to use a stop loss and trade moves like that. And if we had that as our second risk-free portion, and if we had that as our third, and even if you just wanted to play with a smaller amount of money, you have 500 earns you 500, 200, 200, risk-free, raise your stop loss. Your stop loss is now there. If you get stopped out, you walk away with $620 roughly.
Yeah.
If you don't get stopped out because you pretty much just hit that second TP, so now you're up 800. If we start to close some candles under here, then if we start to close some candles up here, then we'll shift our stop loss to there, and then that's $1,000 in a day just on a 30-minute move if you structured it like that.
Do you guys mind if I add blue into the call?
Go for it. More the merrier. Oh.
The tricky thing for me, I don't know about you guys, but the tricky thing for me is spotting fair value gaps that price actually retraces to. I find that I often get too greedy with perfecting my entries, and then like I'll just about not get a fill. Price will move out, from where I had anticipated it to retrace to. And
hello. Yeah, I'm often the same. Like, because if you dug right down into the bottom of this candle, then you might find something lower than where it went. Also, there is that option where it could liquidity sweep. So when you've got all that in the back of your mind and you think, okay, well, I could liquidity sweep, I could go for this first fair value gap, and then on a multi-candle break, which this isn't, but if this one candle had broken two, then it could just bounce directly off the top of that candle, and then head up before coming back. So there are a lot of variables around entry, and if you're super greedy, you'll miss some trades. Like, it's definitely
By
possible.
the way, Sin, did you take this trade while you were in call with us?
This one on the screen here?
Yeah.
No. I should have. I mean, I got the alert. That was the alert there, but no, I don't like trading. Like, to be honest, I'm a horrifically nervous trader. I suffer from fear of loss. I kind of just, and you'll notice when I go really quiet, it's because I'm probably in a trade, and I'll get more comfortable once I've taken first profits and then raised my stop, and past that I'll let things ride because I'm playing with the house's money at that point. But yeah, I try to stay really super focused when I'm in a trade. But yeah, that would be TP2. 24 minutes till we close a candle, so we still can't raise our stop loss. We've got to keep it down here. But if we close and open a candle above here, then we could raise to here, keep it just one level below, and then if we get this TP, then in theory, if you left a moonbag on the table, then you could raise it to there afterwards. But it's for now we're still down here, haven't taken 2 profits. So this is just an example of one 30-minute trade that could earn me $1,000 a day in what I feel is completely risk-free, because I understand that
Don't call
this,
it risk,
this
please.
equals this. Oh, you
Don't
will
think your life is risk-free, Fred. Don't do it. Don't do it.
you will after a while. Like after a while.
Almost wish it would get broken on that one.
Yeah.
Do you mind zooming in and just showing us how exactly you decided on the fair value gap there that you went with?
Yep. So we had our break.
Yeah, the 1v1.
Yep, 1v1. So one breaks one. I dropped to 15-minute. Nothing. 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 So getting kind of small now.
Wow. Yeah.
Still nothing. Oh, hello.
Bingo.
See this? Yeah. Okay. That candle, fair value gap, retested, caused a pump, not filled. Really, really, really tightly not filled. That's your entry. Down in there. Sometimes price actually doesn't, even on the re-entry, doesn't fill it. So that's why I leave it there, because I'd probably look to enter here. And that's going to get you in the trade for sure, entering on the halfway mark of an incomplete FVG. If you wanted to be a bit more greedy, you'd be entering on that. And if you wanted to be even more greedy, you'd be going down a time frame and seeing if you can find another one. Yeah, displacements, but you'll notice as you go down, you start to find many, many, many more, options.
And that's exactly my issue. Like I'll go all the way down into the 10-second even, and I'll find a lower one still, and then price just won't get back down that low.
Yeah, like I like. That's not actually a fair value yet. So that's a unvisited support candle. So I mean, I'd be interested in this. I'd be interested in that. You've got a displacement there, which hasn't been corrected. So I'd be interested in that. So you back to 30-minute. Let's see which ones we get. It was the uncorrected displacement. There. So if you'd gone for that low fair value gap, you wouldn't have got in. If you'd gone for that really tight fair value gap, it would have shot past you a little bit. If you'd gone for the uncorrected displacement in between the two, you would have had your perfect entry. Displacement, like if you think of it like a game of poker, like in cards, displacements trump fair value gaps. They are generally where price is more interested in fixing. Fair value gaps don't always get filled. They're not. Whereas displacements are messed up orders in the order book. They really have to be corrected, or price no longer is accurate if there is a displacement, and price needs to be accurate. So that's why that trumps those. And it was on like
they've got to go back and fix their order books.
Yeah. Otherwise, every single price thereafter is actually not correct, because every single candle created thereafter is not actually representing the real price. So it's really got to go fix it. It's like the and that was a 15-second chart, to find that. So you can really delve that sort of deep into it, and then now your risk reward is better. If
And
you've
are
taken
you
that.
increasing your leverage with the different targets there? So you have the first one, which is the guaranteed 1.6, and then you're going up to the 2.6 and the 3.6.
No, but
no.
I just take that. You know me. I just take that.
Yeah.
I can take 3 of those a day and make money, and I feel very mentally sound doing that. But like if I wanted to make the entire lot in one hit, then sure, you put $500 on this one, you've made $906 at your first TP. You only put 200 on that one and 200 on that one. If the price whips back and stops you out, you haven't lost. You've made.
Yeah, you're
But-
playing with the house's money.
Yeah, but if it goes here, that 200 portion has become another 625, daily target achieved. And if it goes there, which it may or may not, then that 200 has become another 800, daily target exceeded. So and depending on where this candle closes in the next 18 minutes, depends how you move your stop loss. But, currently you're entirely house's money, and these portions here would get stopped out with another $400 in them, between them, and that's daily target achieved no matter how that trade plays out.
Yeah.
Actually, that one's already TP'd, so technically you're done. And now if your third one gets stopped out,
Yeah. Every time we discuss trades, I always find that I'm playing like the 1, 2 hour, 3 hour breaks, and you're just like dialed into the 15-minute chart.
yeah.
And yeah. So when trading the high time frame stuff, I mean, really two massive risks. One is if you're looking to play with leverage on a tight range, when you're trading on high time frames like that, you really just don't know when moves are going to play out, and the higher you go, the less reliability you get on the when component.
Yeah.
And that can really fuck with you if you have a lot of leverage, or just you haven't allocated responsibly. That a move can start reversing because it's retracing deeper than you've anticipated, and then you can get completely washed out of a trade. So just
Yeah.
watch out.
It's like if you took a 15-minute trade on the hourly rollover, it's now going to be another hour before that 15-minute trade is going to get fucked with by the next hourly rollover. And so if you took a 15-minute trade at the beginning of an hourly rollover, and that hourly rollover was the beginning of the 4-hour rollover, you're not going to get a lot of retracements in that, and it's not going to mess with you a lot, because it's all about the closing of candles on each individual time frame. So if you're in a 15-minute trade at the beginning of an hourly rollover, at the beginning of a 4-hour rollover, at the beginning, so what I'm basically saying here is the first trade after daily open is probably going to be the smoothest, easiest trade to take if you take it on a low time frame, because it's going to take at least 4 candles before the hourly could mess with it, and it's going to take at least 4 hourly candles before the 4-hour could mess with it, and so on and so forth. And there's more time frames at play than that, but those are kind of like your opportune times just to take something.
Yeah, it's like all the time frames are just kind of in sync, right?
Yeah.
Being that they're also fractal to one another.
100%.
Then things start diverging, but then
Yes.
you'll find that they kind of converge,
Yeah.
and kind of bend the knee to higher time frame bias.
And if you want to be super geeky, watch what a candle does as it gets close to its closing time. You'll notice that quite often midway through its opening closing time, the price is at the middle, at the top, it's doing something, and then if it wants to draw back, it will start to do it the closer it gets to close. And you can then relate that to lower time frame structure breaking down. So like if we come in here, you can see that our 5-minute structure has broken down, and we'll bounce back up and we'll retest the 5-minute structure, and then we'll have a short. So knowing when, but then come down to a 1-minute structure, we've got a long. And why have we got a long? Because 1 minute needs to retrace to the break of the 5.
Yeah.
So
Yeah.
time is just moving around, doing exactly what it's meant to do.
Different intervals. Yeah.
Yep. Yeah. And the 1618 level, based on the time frame that you're trading on, is the only part that really is a guarantee. Anything past that, and if you want the risk reward to be good, you've got to find the FVG or the displacement or something like that to actually get the entry on. And that kind of that'll keep you happy as far as your normal traditional trader's mentality goes, because if you fuck it up, doesn't matter. Your risk reward is still good on every trade you take.
Yeah.
Yeah.
Safe and sound.
Yeah.
Could you dial in Tasso or hi? Slaying Beast invited me just. I'm a little bit late to the party. Thanks for sharing.
Hello.
Could you maybe dial one more time into how to identify displacement? Because that's new
So
to me.
displacements exist where the open and closing prices. So the only thing that matters to the algorithms that are moving the price around is the open and closing prices at any given time frame. That's the only thing they care about. They are the data points. So the problem is that if you have displacements between open and close, you have now got the wrong price at any given moment on a time frame. So typically it will go back to try and fix those. So in this example, you've got a break, and so we know there's going to be a retrace. So the first thing we do is we start rolling down time frames. So we go to 15 minutes, we see no fair value gaps. We go to 10 minutes, no fair value gaps. 5 minutes, no fair value gaps. All right. You have got this one. It's complete. Like it. No, I may mark this out because it was a tested fair value gap and it created a pump. So that's a potential revisit area.
But then what's the thesis for a revisit here? If I mean in my books that looks like a filled FVG for me, right?
It is. Sometimes FVGs that are filled still react, and it's possible, It's one of those ones where
the form of support or resistance, right?
Yeah,
Not
correct.
necessarily that the order books looking to revisit for a fill.
Yeah, but now we've moved forward. Like we've got another one here, so you can quite safely come forward to that one, and that one's not filled. So
just about. Right?
Yeah. So this is now our sort of best target. We'd be thinking, okay, we're going here, and that may be where you enter. But if you go lower, and all it took was you jump down to a 15-second chart, and then you go, oh, you little shitter, body displaced. We're going to have to come back and fix that. And it's within the range, It could go lower, but this body was fixed. There is a fair value gap here. Maybe we delve into that. But that is something that they need to fix because it messes with the order of things. So,
Blue, are you understanding so far how these are being spotted and why we can visually point them out?
I did follow onto this point before he just said this is the displacement candle, and I'm just trying to understand what makes it the displacement candle right away.
see the open of the candle opens at the wrong level. So this candle closes here, and this candle opens here. Now that changes the price in the order book by about a cent. And I know that sounds really weird, but a cent actually makes a difference to an order book, because over time, because all of this stuff works to a mathematical formula which requires multiplication. So the problem is, if you take a cent and you start to multiply it over a long period of time, it grows and it becomes a bigger inaccuracy. So this fella here needs to be revisited to actually correct that. And otherwise, everything else up here becomes wrong. So,
But we also got one to the right, the next small gap between the small one and the big one, right?
yep,
Or is this okay?
and that got fixed
Got
here.
fixed. Okay.
Yeah, I mean, that's going to get retraced too. So we're looking for something ideally within the 0.5 to the 1 that the price wants to or needs to retrace to. It doesn't need to fill a fair value gap. Wants
And
to.
just to stress, so Singdot, if you just scroll down a little bit, you see that a massive displacement there, guys. The two yellow candles that was fixed by the blue wick. You see that blue wick there?
Yeah.
Price revisited to fix that displacement.
And so you see how you can't see a break here? Like, there's no break. We didn't break above that blue, right? But hold on a second. If you just visually lift that up so that it's higher than that, and then you take that second one and push it up as well, this second one actually closed above there if you shifted that whole part of the chart up and corrected that displacement. This is how values in order books are incorrect, and that work down there and up again is how they get corrected. So this is just a visual representation of data, and these things work with data. We work with candles, right? So this is the most greedy entry. It doesn't mean it doesn't hit here, go up, come down, hit here, and go up again. Now that's entirely possible, but it's going to want to come here.
Okay. Yeah, no, it makes sense. Thanks.
And then play. And there you go. Straight through the FVG, corrected the displacement. Target 1. Target 2. Didn't hit 3. But it may close over target 1, in which case it may keep going. But could also come back down. So that's effectively how you find your entries, by going down through the timeframes and identifying the places where price wants to balance or recover.
Yeah.
And so you can backtest the bejesus out of this, as Ali's been doing. You can go, here's another candle. It's been broken. Then you just put a fib on it. Go down to the 15-minute. Five. No. 3. Maybe. 1. Likely.
Have you guys discussed already what makes a difference if like 3 candles break 1 or 1 candle breaks 3?
God, this is munted. This is really bad. Yep. Yep. 3 can't break 1. 1 can break 3. 2 can break 1. 1 can break 1. It's got to be the same or less.
And this is the comment, Blue, that I was alluding to in public chat. Time is an important function in this strategy, and you really want to take reliable trades. So if you're trading based off of a trigger where 3 distribution candles close below 1 accumulation candle, then you've got really slow momentum playing out, and new structure can be built within that momentum that's slow, that will kind of completely take your target off base. So ideally you want to be playing either a 1v1, so 1 distribution closes below an accumulation, or vice versa, or a 2v2, and so on. Is that right, Syncdot?
Yep, 100%. So you know how I got to that 15-second chart and I just said, no, this is fucked? There was so much broken stuff in the bottom of this here. This is not a surprise. Like, when you jump down and have a look at how absolutely screwed that price structure was. I mean, look at that.
Yeah, and that tells you that price will have to revisit.
Yeah. Like, this is the area over here. It is so completely stuffed that, I mean, it's probably something all the way over here on the chart. Yup. You know, this is,
But
Wouldn't
price action
we be
keeps
able
doing
to find
this,
something
right?
like that? Sorry.
there's a lot of
Yeah.
things that need to be fixed, you know, in that price. So you would be aiming to enter at the 0, potentially even lower than the 0 on that one. And yep, looky at our big mother of a gap that we had in that old candle, which is below the 0 but before the negative. That was your perfect entry. Because I think if they made this too easy, everyone would figure it out. So it's kind of like you've got to keep things really, really like looking random, even though they're not random. Yeah.
Did you walk the guys through your thesis behind sort of this strategy and what price action is predicated on? Maybe I can quickly give like a 1-minute overview, and then you can get more into the specifics. But essentially, price isn't based off of who's buying or selling, as you traditionally understand. That concept in markets, but rather price is predetermined by the market makers, and it simply just price reflects order books, right? So a market maker at any moment in time can choose to chuck in 1,000 sell orders, remove those, toss in 100 buy orders, and so on and so forth. And by doing so, the market makers are really changing or shifting or reorganizing their order books and kind of manipulating the number of buy orders versus the number of sell orders. This mathematical equation of how many buys versus how many sells is what produces price, right? So price isn't necessarily produced by who's buying or who's selling per se. It's produced by market makers adjusting their order books. So then market makers want to move price always toward liquidity, right? And in comes your liquidity heat maps, Blue, that you often refer to in your trading. So if you were a market maker and you had a shit ton of liquidity to grab, like above us, let's say at 155, you wouldn't just hit one button on the order book and shoot the price up to 155 because everybody would go like, fuck, the markets are completely manipulated. This is clearly unnatural price action behavior. So instead what you do is you slowly but surely move price to the top of that range and grab your liquidity in a way that is made to look organic or natural.
Yeah.
And I know
And then
that
wick.
sounds, yeah, and then wick. And I know that sounds like you're wearing a fucking tinfoil hat on, but
No, absolutely not.
yeah. So I may have butchered some elements of what you taught me, Sin. But
no, that's bang on. Then there's the psychological aspect of it, is that they've worked out through maths how to control people, and the way that they move from one to the other will induce the result that they're trying to achieve. So that's where you get these sudden breaks to the downside, and then the reversals from the sudden breaks to the downside to the upside, because there wasn't enough liquidity for them at the upside. So what do? They induce shorts by moving the market in a way that people psychologically react to. So basically they're running an order book, controlling price. There's a psychological element to it, to induce taking people's money effectively. Sounds pretty brutal.
Hence the market's just being a giant wealth transfer machine.
Yeah.
And then one additional point to just be cognizant of is how news plays a function in all of this. So let's say you're a market maker. You have a shit ton of liquidity, let's say below, right? Because everyone's longing Solana. Everybody thinks it's going to the moon. Let's say significant, but not all too significant news event pops up. Suddenly, everybody in the markets are talking about it, and it's all over your face. And the market makers will use this kind of this moment, right, to just completely dump price. So then it becomes justified. You as a trader, you're looking at the charts and you're, oh my God, okay, I see Bitcoin dumped so hard because the who I think it was the president of Iran, he got into like a minor accident or something, and then Bitcoin just like fell off a fucking cliff. And that just like made no sense to me. Like, who out there is just completely dumping Bitcoin because some fucking president, like it doesn't, it makes sense, but it doesn't. And so market makers kind of play with that, right?
And like, if you look at,
I call a momentum trade to myself. If there's something that breaks a certain significance threshold, then I like to trade on that, because I know it will go into the direction either, even if it's completely bullshit that it does it, but as it is doing it, it also makes sense to take the trade. So
if you look at, say, if you watch James's videos and he's talking about how the Bitcoin price has gone down and this, that, the next thing, and yet there's all these people accumulating, and you sort of sit there and think, if people are buying more than what's available, why is it going down? and it literally is just,
OTC trading.
It's just a rigged game. The whole thing is a rigged game. But once you sort of understand it, and once you can find the mistakes that they leave behind, and once you understand that mathematically those mistakes, they create a problem that gets exponentially bigger over time, so therefore they do have to be corrected. And that's where short-term trading and scalping and all that kind of stuff can jump in, To a certain degree, but I don't think, I don't think it could be that fast, or everybody would exit the markets. They need real human beings to put their money on the table to lose it. And the thing is, if AI did it, I mean, it's already in effect AI doing it now.
I was just gonna say, yeah.
Yeah, I mean, it's all just algorithms that are moving the price around, and they are making choices based on data. So they are AI. So just not to the same degree. Like, we might think of AI as a machine that we can talk to like it was a human, whereas these algorithms are just AI. And then when they make a mistake and they realize they've made a mistake, they go back and correct it. And that's where you're finding your entries and your exits effectively.
Just think about, I think, the core. Sorry, can you say that again?
Yeah, probably are. I don't really know. It's yeah, I try not to think about the why too much. All we know is that, as I say, this is how price moves. And if you have an understanding of it and you backtest it enough, you'll gain the confidence to then trust it. Once you've got the confidence to trust it, then you've got two key aspects of trading. You've got a strategy and the confidence to execute it. And it also gives you a really good understanding of how to manage a trade, which is that final step. Like, what do I have to watch out for while I'm in the trade? So I've got a strategy, I've got the confidence to execute it, and then while I'm in it, I know how price moves. So now I can watch across multi-time frame to see if something kicks in the algo that's going to change things. Because the target will always be hit. It doesn't mean it doesn't retrace first because of a different time frame and then go back. News and market opens like New York Open tend to do that. Like, that'd be the go back part. Like, if you had a 2-hour move that didn't complete by 20 cents and retraced all the way back down because of a 4-hour move, New York will open, there'll be some news, the markets will be bullish or bearish because of it, and then whoompa, the price goes back and completes that 20-cent difference. And that's the kind of thing you start to see just playing out every single day. And then weekends, the range compresses, but the hours at which the price moves still apply. So you can look at weekend markets, and you start to notice they all have the same patterns to that of weekday markets. So none of these are real markets because they're over a weekend, but you still have a setup created into the market, executed, and a long. You then have a setup mid-market. So, and this is like what I learned by studying things like ICT theory, is that a lot of people actually have a pretty good grasp on trading from one angle or one angle or another, and they're all sort of right. But when you really start to understand that actually it's all just the same thing, and they've just noticed certain parts of it, like, we have create a setup into the market, up, hit the short, create a further long, enter the long, exit the long, create a breakdown, 2 for 2, into the short, exit the short, create a long, into the long, long. See this? Like,
Yeah.
if fees were not a thing, and I could just sit here with a button that just went long, short, long, short, long, short. And so if you were ICT and you were talking about the millions of dollars you've made in trading, it's because they set up a setup into the market that's his belief, and that is true. There it goes. Then it doesn't.
What is ICT? I'm not sure I'm familiar.
He's a relatively famous trader called Inner Circle Trading, and he sort of states that at the beginning of any market, and he typically trades New York because it has the most volume. At the beginning of any market, there will be a setup created. So this wick being higher than this and this being lower than this means that these two candles are actually distribution, even though one of them looks like accumulation. So they're distribution. And then these two break it. There's your re-entry. There's your long. So, that's a setup, but harder to spot, but a setup into the New York market, and then the setup executing through there. So, so if you studied ICT and then what you'd walk away with is you'd walk away with this thing about there's going to be a setup at the start of a market. The problem is you don't know fucking what it is. Like, it's like, is this a short? Is it a long? What's coming? There's going to be something, but I don't know what it is. And by understanding just pure price structure and how it moves through time, it becomes irrelevant that it's the start of the market or the end or the middle or whatever. You can just find the trades. But it's also true to say that if something gets left behind, it will probably get recovered at the beginning of a market. And psychologically, people understand that because they go, the volume comes in at the beginning of the markets. And, well, like I say, there's no markets there. Market's closed. It's the weekend. Volume still comes in at the beginning and the closes of those times. It's just bigger when you now come back to during the week. It's just bigger.
By the way, to come back to that BTC stacking point, it is actually happening, but it's all off-the-counter trading, right? Like it's not on the spot. That's the only reason why I really hate the American ETFs, because all the ones like the one in Hong Kong, etc., are spot ETFs, so that you bought on-chain. The off-chain bullshit that America is using is used to hide the stacking behind the scenes as much and as long as possible.
That is a absolute money printer. That is for BlackRock. I mean, the concept that hopefully by now, with everything you've seen, we understand the concept that you don't need money to move markets. You just need orders and order books, right? And markets can be moved. And if you're issuing a share to somebody at a certain price, which is meant to be balanced, and you have a day to actually back it with an asset because of T+1, well, you're going to issue a share. You're going to push the market down by a couple of % just to not look too obvious. And then you're going to stack OTC, and then you're going to raise the market back up. People expect it to be volatile. The ETF shareholders are okay with that 1 or 2% up or down. And you've just brought in, $155 million in a day and then taken 1 or 2% cut on that instantaneously before you T+1. It is insanely brilliant.
T+1. It's literally, they have a week to fill the orders. A week.
They have a week. Holy hell.
They have a week to fill the orders.
Yeah, I didn't know that.
And if they're just like, okay, the orders came in on Monday and there's so many fucking orders, and by Friday the price hasn't tanked yet. I don't know, find someone, you will sell all your portfolio, yeah, go for it. The whole weekend down, and Monday we will pump back up. How many times have you said it by now? How many times?
I mean, and that's why like the Hong Kong ETFs probably will never be as popular, because the people that are behind them can't manipulate it like that. Because it is literally buying it instantaneously. It's a spot to spot, But that is deep down what made me think I need to, no jokes, sell a house or two and rebalance my portfolio into BTC, because now that there is so much money to be made by companies like BlackRock based on the structure of those ETFs, that asset is forever going to be on the table. And they're not going to want people to lose on it, because then those people won't be in it anymore.
Exactly.
So, yeah. I don't have the same, as much as I love Solana and it's paid my bills for 18 months, I do not have the same faith on something like Solana. I know where it's going to go, but I also know it is, at the end of the day, just an altcoin. And you don't need to hold that much of it because the transaction fees are so low. So, like, I know where it'll go for the short term. I would have no worries putting $1 million in it today. And I'd look at the drawdown and I wouldn't care. And I'll just sell at 226 and above.
By the
So-
way, if you plan to do these things more often, why don't you just create a Discord server? And if you say the more the merrier, why don't you just let people join that server for if they want,
Mostly because I just
conversation?
don't want to do this the rest of my life.
No. But you always say I'm willing to talk to people, this and that, and blah blah blah. You could just do it for a week or something. Like just
True.
let people join that server, and they can join on their own terms. Because I constantly see people asking to get into a call with you. Well, today I had the time to do this, but other times I might have not. But you could just say I'll create the server. It's just for a week, and and afterwards I'm gone. I'm done doing this. But as you, I get the feeling you've been doing this for quite a few days now. So why
Yeah.
not make it more efficient?
Ultimately, I think there's a guy called Ali. Hey, Ali, that's probably going to take over and keep teaching people. Hopefully.
Yeah, it's fun. A teaching crystallizes my own understanding. But look, I think for us, it's more enjoyable to trade and share ideas with other intelligent people, and it just I think I'd go insane if I just looked at the charts and didn't have anyone to talk to. So I think it's fun to keep a conversation going, and I think it's fun to do it in this kind of ad hoc manner. I think if people are dedicated enough, they will be there at the right time. I think Sindot's around, I'm around. You guys now have this knowledge and understanding, and you'll be around. And I think we should just continue feeding each other knowledge this way.
Yeah, definitely. Very insightful, helpful, and speed up knowledge gathering much more.
That,
Exchanging with others. And as far as I recognize, the guys here on the call are also already, for the most part, the core people that keep talking about this and exchanging, and others are mostly YOLOing in on James signals, which are mostly $10 to $20 off, but good enough for long-term trades, I'd say. And are not so interested and don't have the energy and seriousness to make money off of it seriously. Is at least my perception of the server for over 2 years. So, I mean, you have maybe 2 or 3 more guys, but other than that, mostly others are just asking, should I long here? Should I short here? And then it's right answer. Why do you even ask if you don't know? So
we're
maybe ask other questions. So
we're starting to build more liquidity up above. It's they're kind of inducing what they want.
Yeah.
Interesting. Yeah. Just beep out all the swear words.
Make it PG-13.
Swear words part of the experience now.
True. My fucking stop loss. My fucking stop loss.
I mean, if you're in a trade and it's happening live, you would say that, yeah.
Yeah. And FYI, now that everyone's going to hear this as a recording at some point, use a stop loss. It's responsible.
And have you shown the guys an example of a trade that has gone against you?
The old upwards continuation. Don't take the next long thing.
Yeah.
That one. Yeah. Early in the piece, I did.
Okay, good.
I don't know whether there's any you can find around here. That's all. Backside break. Backside break
Yeah, so
after.
Generally, avoid trading the news. Avoid trading market opens and closures unless you can anticipate the setup. Avoid trading after a big move up, big move down.
Yeah, that third candle break there, I think it had run out of
I mean, that's the same as that I'm saying, like the EA group, don't let all the emotional people, the listen to the news people get to you, that kind of thing, right?
Yeah.
Yeah.
So I use PVSRA volume candles. Like, so see these three coming up here. I would
Yeah.
be really, really hesitant to take the next long presented to me after this. So, which is
They're just
this.
telling you it wants to go higher, right?
Yeah, so there, see these. You got 3 down, 2 up. You should be able to get an entry here, and you should be able to TP at 63. But nah, those are the kind of rules where you stay away from it, and that's why I have these candles, because you just go, well, they've increased the market volume by so much to get the price to there. This retracement and then that pump to the upside, this entry is probably not going to get there. But it also gives you some certainty that it will go back to 163. Like, there is a lot of upside targets being left behind. Like, at the moment, there's a lot of reasons why it's going to go back up, go back up, go back up. But yeah, that's part of that rule. Big pump, don't take the continuation on the next move because it'll probably fail. And you might be able to find something in here. Big down creates a short opportunity there. Liquidity sweep down. And that took a really long time to play out.
One more thing
Yeah.
from my side that I'm still struggling with a little bit. If we find a 3v3, and we were talking about this, you and I, last time we spoke, but essentially, like, sometimes going against the rule of not to group fibs. And you told me about how if you're playing a 3v3, some trades would play out sooner than others. So let's imagine you have 3 distribution candles, 1, 2, 3, and then 3 accumulation candles, 3, 2, 1. The 3 and the 3 would play out soonest, right? So
Yeah.
the 2 candles closest, yeah. And then the further apart you go from the opposite candles breaking one another, the moves tend to take longer to play out. Is that right?
Yeah, so it's no different to like 2 versus 2.
Exactly.
Which is actually technically 2 versus 1, 2, 3, 4, 5, right? Because all of that
Correct.
is distribution. So
Correct.
you get your first violent, rapid move, which is in here, up there. Then you get your second. Then you get your third. Then you get your fourth.
Mm-hmm.
So this is
How many did we group? We grouped like 5, right?
Yeah. So this is range support, right? Now we start to fail. You know, we sweep liquidity, we go up. Now we're fucked. We don't have support anymore, right? So all of that, this entire thing through here, bouncing between these levels, comes from this. But that takes a lot to wrap your head around and understand and spot. And I don't trade these. Like, I just take that one, and I'd take this bottom one, and then I'd be done. And then I'd look for the support structure created within the range. So it's fair to say this is like exterior support where it's going to hold the price up multiple times. And then this is interior support where it's not going to hold the price up as much, but you can see that it still does. Like we come into here, we go up, we hit target 1, target 2, target 3, target 4.
Yeah.
Could you explain? Sorry.
Yeah.
Could you explain on this example how you then make up an entry for it on this 2 versus 2 break right there?
Yeah.
Because when it breaks, then the price is already up there, and what do you draw then or wait for, or do you then scale in, zoom in to the 15 seconds and look for displacements, or what is generally the approach?
So with a multi-candle break, the entry will not usually be down as low. Like, as you can see here, the entry was actually between the 1 and the 0.5.
Yeah, exactly. And my fail is mostly I enter too soon. and then
Yeah.
then you have
So
worse trades.
I mean, you can, like, I've seen these trades literally, particularly on shorts. I've seen these trades literally bounce the 1 to the cent and then go for it. Like, I mean, where is a multi-candle short? I mean, that just didn't stop. Like, so this is ICT theory. His theory is that it tests the fair value gap, and that is actually true at the beginning of the market sometimes. Like, you've got 1, so that one started lower, went higher, so you've got 2 broken by 2, fair value gap created, retest the fair value gap, dump. And so that's effectively an ICT trade, and it began at the beginning of the New York market. And that's his sole game, that's all he trades, and he makes a lot of money. And so if we look up here, it's gone up high, 1 broke, 1, 2, 3, 4. So this is not technically an ICT trade, but 1, 2, 3, 4. Retest was just up into the 1. Also happened to be into the fair value gap, and then dump. So it's very similar to an ICT trade. So most of these multi-candle breaks, the retest will be fast, violent, and not as deep, because it leaves the top candle for later, so that it'll go back there and it will have some form of rejection in the future. We haven't got back there yet, but it'll have some form of rejection in the future when it gets back to that level. And that will be based off just that single top candle that was broken. So that's another one. Created a very violent fall. So that's 1, 2, 3 broken by 1. Entry, violence.
Why do these count as 3 when it's just 2 up and 1 down? For me, this 1 breaks 2.
Because this one,
the prior dump also considered.
See the wick of that candle?
Yeah.
So it was already in accumulation as that opened and continued higher. So if you just imagine merging these into one candle, it started here and it accumulated through time to here.
Yeah.
So all of that is actually accumulation, even though that's blue.
Yeah, so bearish candle doesn't necessarily mean that it's distribution, and yellow or bullish candle doesn't necessarily mean that it's accumulation, blue.
Yeah.
So think of everything as in terms of zones of distribution and zones of accumulation, right?
Yeah.
And that those zones are constantly breaking one another. And that's actually a very intuitive, logical way to just view the markets, right? The price is either at a point where people are buying or market makers are pushing in buy orders, or conversely selling, right?
Yeah.
So question is, how much distribution does it take to break accumulation and vice versa? So just think of PA, or price action, just as accumulation and distribution, not necessarily as here's a bullish candle and here's a bearish candle.
So in this group,
makes sense. Just didn't know you even take the inverse price action into counting candles to break 1 versus 3 or 1 versus 1 or.
So say this group here. It's probably there. Retest. This can be, and the thing about groups is you can be out by a cent or something and still be a break, because there can be displacements in amongst these candles. So if you look at this one, it was distribution from there down to there. Still technically distribution because it hasn't closed above there yet. still technically distribution because it hasn't closed above there yet. This is a really tricky one. It's so close that it probably did break it by the time you take into account. And I would have sat on the fence and gone, ooh, do I enter this? Do I not enter this? And then it dips back in ever so subtly and then shoots up. So that is all distribution because the wick started higher, it sold down, and then it became accumulation when it got just above it. So the reason I sort of suggest like you just trade single candle breaks is just because it's so much simpler to figure out single candle breaks. It's like this. When price hit 160, price was going to go to 158. Easy.
So there's almost two triggers here, and please just keep jumping in, Sin, if I'm misunderstanding anything. So the first trigger you're looking for is a break, okay?
Mm-hmm.
And typically you want to trade 1v1s, right?
Mm-hmm.
Or 2v1s if you really understand where price action is going and what ranges we're trading in, and you're fairly confident we're not going to be breaking those ranges. So that's the first trigger, is a break. Then the second trigger is you want to get in between the 0 and the 0.5. So in this case, for the short here, it's between 162 and 161. Sometimes getting in between the 0.5 and 1, if you're not confident we'll get a deep enough retracement, that's your second trigger. So then you're like, okay, price is retraced to where I need it to be at so that I can get a decent risk reward for getting my minimum 1.6. Once that happens, you enter and then you aim to take your profits at 1.6. If you want to enter gambling land, then you continue on to 2.6 and 3.6 and so on.
Yeah. So gambling land, bad risk reward. Welcome to a schlong.
Yeah.
Break. So we've got a break. Got a break. Fast, violent retest. Break 2, 3, 4. Continuation. Where's that fib? Okay. So fib was there. Got continuation to here. TP'd. Bounced. Went deeper. Feeling really scared. Emotions taking over. Want to cut my wrists. TP. That's a, So, like, that's effectively how price moved, because we know we're heading into this candle. This candle's going to support the price. This break was sending it down. This is going to support it. Where does it send it back to? It sends it back to the untested candle at the top of the range. Now we have a short back to 158 as a minimum, and there we go. So what you'll note here is that it hit here, it went there. That is over. Do not try to enter in here.
Yeah.
You got it. You were really lucky. It went up, it entered, it fell down again, it went back up. That will not always happen. Like once you've touched anything from the 1 or upwards and come back to the 1618, do not take the risk. Just wait for the next move, because there will always be another one. 2 verse 2. Retest. Dump. See? Don't risk taking that second one. Wait for these two to break these two, enter on the retest, and take the dump.
You can predetermine the retest clawback, if you want to call it that, by digging in to find where your displacement or fair value gap is.
Yeah. So, and then break to the upside, dump, dump, dump. So this is the kind of move that gets you scared shitless, because you were thinking this is going up. Come down here, consolidate, new price actions formed. More downside. Downside. By now you'd probably be stopped out.
So just from a very kind of intuitive understanding, right? Linking back to the whole idea of market makers having predetermined price targets. Way to kind of view and think of the strategy is it's all in the candles, right? The candles are telling you everything. How do they do this? Through showing you whether distribution is breaking over accumulation or not, right? So let's say you see a accumulation trigger, meaning we are entering an accumulation phase. You know that price action is going to go in that direction because the market makers, the candles, however you want to think of it psychologically, has given you this kind of clue, which is your trigger, right? Which is kind of this cheat code that you have to see where price action will go. Now you know that before we get to this point, at some point we are going to have to retrace back to a sensible level to then go back to that point and make that target reached, right?
Yep.
Which goes back to what Sindot was saying around how the algos or whatever it is that's moving price needs to kind of make price action look like it's moving organically or naturally. So it's this wave that you keep seeing play out across all fractals, across all time frames, time and time again, right? Price never just goes straight up or straight down. There are levels of retracement. Those levels of retracement you can apply to a 5 minute, to a 1 second, to a 4 hour, to a 1 month, to a 1 week. It doesn't matter. It's just price will always move in a certain direction, and as it's moving in that direction, there are minimum retracements that need to happen. You will spot your break signal, wait for that minimum retracement, and then take your profits at the guaranteed 1.6 on the fib. Is that clear to everybody?
And so
I guess for the most part, the rest will follow with exercise and digging.
And
Yeah, just go ahead.
this example here with your 162, this is kind of why you've got to be looking at that higher time frame, because if you were observing this time frame, weekly, if we were looking at a weekly, this candle was the untested support candle, and the target to that was 162 there. Once we went into this candle, anywhere down to that 107 mark, etc., we were then long biased to 162. Once you'd hit 162 on a monthly, you were retesting, you were performing the retest of a 2 broken by 1. Once you've done this, 1, 2, 2. That was your retest. This is all still part of your retest. That's where 1, 2, 2 comes from. So basically, we went into weekly support. We went up to our target. From that point, you're inside this, and you should be short bias. Anything under 162, from a weekly perspective, you should be shorting. 122 flips the bias again, unfortunately, and at that point, you are neutral on a weekly. And depending on how many weeks it takes to get there, unfortunately, if it is still down here in 2 weeks, then we get another shot at the dip down to 117 because we'll be breaking that one. However, the retracement of this break could easily come up into there, which then fulfills the 192. Yeah, which then fulfills the outstanding monthly up to the 1618. So ranges, performing within ranges across different timeframes means that we could break here, we could rally to here, we could dump back to here, we could fulfill that, and then we could continue up depending on the engulfment of this big candle. Because if we actually then do all that, and we do that within a time frame that doesn't have to be much, because when you sort of look at all this distribution, if you broke above here, if we come down here and say we do it in one more candle, that'll be 2 weeks. Then if we start to accumulate, especially if we dipped a little bit below 109, which is entirely possible given that gap there, if we dip down to say 102, 103, somewhere around there, then we came back up in accumulation. Because we were lower than 1, 2, 3, 4 weeks of distribution, if we got back above that within 4 weeks, then we have a faster upwards move to that of the distribution, and then we really genuinely look like we're heading to those upper levels, and so that's kind of what I'm waiting on.
You maybe go back to the weekly and elaborate on where you said the weekly didn't really got tested yet on these 4 bars in the middle, where right after July.
Yeah,
so this weekly wasn't tested yet or something like that.
So this one here. So this one back here in March was big pump up, run out of money, continuation, go down to accumulate. We're literally down accumulating in that range now, and then that's our 226 target, which is why I say I'd be happy to buy. I don't care if it goes from 140 to 100. I mean, great, it'd be better to buy it at 100, but I'm still happy with 140 to 226. There's other things you can deduce from this as well when you actually start looking at the groups. Like if you take that and then you look at what was broken by 2, that was broken by 2. So 1, 2 up, 215. We already know that will get fulfilled, 226. So you start trying to find what is your highest target that has yet to be fulfilled but will be fulfilled. And yeah, I mean, as a spot owner that doesn't have to think about leverage, there's so much money.
I would just be very wary of trading, using this understanding to trade on these high time frames. I think one way to think of this is the key takeaway is you now understand accumulation and distribution. You understand sort of the telltale signals or triggers that actually really do drive price action and aren't just some ad hoc indicators that you're adding onto your charting program. The reason why I'd advise against trading those higher timeframes is because there's just no telling when those moves are going to play out. We could go down to 117 first and then go up to 217 or whatever it is, right? Later, or other way around. There's really just no telling, which I think is why Sin.U just focus on trading the much smaller low timeframes, because that gives you more certainty over your targets with just less room.
Correct.
To just bandy about different
price
points.
You look at this just as an example. 1, 2, 3 up, broke the top of the distribution there. You could take it from here, retest it on the 1, multi-candle, target already hit. You know, like, there's so many trades that are just literally happening all the time.
Yeah.
So
You keep breaking your own rule, though. You keep grouping fibs.
I know I don't really take group fibs, but I could,
Yeah.
like, I suppose. I just don't trust them for
It's-
that. Like, I just don't trust
It's
them.
so
for the fact.
tempting, but
Yeah.
I've made some pretty bad losses doing just that. So
I mean,
careful, guys.
technically, you could count candles. You could go 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, and then you could split that in half. So 1, 2, 3, 4, 5, 6. And if you wanted to play it really safe, yeah, I mean that would be super safe. But yeah, I don't know. I don't. I just don't take those trades. But yeah, there's another one
Yeah.
that I also wouldn't have taken. Yeah, retest up. That's yeah.
Have any of you guys ever tried automating James's indicator alerts into a trading bot?
Nah.
Do you mean his trade alerts or do you mean his actual indicators?
It's trade alerts.
Because his trade alerts suck.
Yeah, this yeah.
At least his leverage ones. I do
Yeah,
know people traced back his Solana wallets. So before the alert went out to other people, people started accumulating SCS, the Solana Casino one before, for example. They front run both the EA group and tried to front run James after he DCA'd his first DCA. So I know people have done that in the past.
Yeah. No, I was speaking to Sindot about it in chat, but I just for fun on a simulator, so not with my own real money, but I just set up on the 1 minute chart using James's trend indicator. I set up a bot that triggers a buy order and a sell order when trend flips from blue to orange and so on. And it's been running for about, I added some parameters and other conditions. It's been running for about 2 months, and it's made thousands of hits, thousands of trades, and it's made 23% on my initial hypothetical, investment. So I'm just curious if anyone from the community has managed to play around with more conditions or just set up systems that are slightly more complex but yield better results. Because from what I've been seeing, it is
not automation. Manually, I use how's it called? Because I unsubscribed from the suit last month. No, not ATR, but the trend. But there are two Confluent now. There are two trend indicators in the suit. One which is more tighter, and the other is streamlined. And whatever. I tried to manually trade on the trend indicator alone in combination with mean reversion. That was if you really sit on top of the charts and look a bit more also how the candles act. Then the returns weren't all too bad. But later I figured out that it's not so much due to the mean reversion and the trend blue and orange flipping rather than other obvious chart readings. So was one reason why I just unsubscribed from the suit, because to me it's at my capital not worth it, $200 a month to leverage it. To me personally, at least. I know others do well, only with PTOS 3L Solana and so on.
Yeah.
Yeah, this buy and sell arrows, I found them pretty inaccurate. For when I applied all my other knowledge, they confused me more than they helped, and they were mostly too late. So then I try to trust them at mean reversion and confluence and trend as the 3 legs of the stool, as he always explains, but many like to ignore and only take the arrows. But when I try to apply it to my own knowledge, then they most of the time confused me more than over like helping me, and generated worse returns. So another reason why I unsubscribe. But that's just me. Maybe others figured it out and apply those indicators very well.
Yeah, it's hard to be consistently on the money with just using the indicators alone. Yeah.
Good summed up. Yes, that's basically it. And they caused more emotional reactions to me because, oh, I got this huge, I paid money, I'm invested, I have 3 signals now. They need to mean something, and now I need to take action and then throw all my other knowledge away and then have just bad trades based on this kind of personal behavior, So
Yeah.
and I like more the approach that it's all in the candles and fair value gap and displacement. These are all things that make much more sense than trying to add up 64 hidden numbers that accumulate or consolidate into a fire of signal that try to be meaningful. That's not so. It's a black box that I cannot understand well enough to my own personal way of handling things. So I like more this Fibonacci candle reading volume. That's just like the most raw possible action on the chart and market maker and investors' behavior as it can get. I guess that's why. To me personally, so
This
others do that.
this thing that I've just turned on, this is sort of like a back testing indicator for trades. So like single candle, multi-candle. See the single candle retests, wins, but the multi-candle doesn't, because you've taken the trade after a large run-up. So like that's the kind of thing you got to watch out for. And then this is only looking at multi-candle options. Then you got a single candle short, enter short, go down. They accumulate what they need to run up and complete the uncompleted, which is that. So now you hit the target for that one, but you had to head short through all that, or just not be in it in the first place because of this. You then spend
Just back on just before you continue, if I could just press you on this for just a moment. So if you go back, let's say you take that 1v1, right? Forget the group.
Yep.
You obviously don't see the bar that precedes the break trigger. So you spot it on the 90-minute, and then I'm assuming immediately you then go into so actually if you just use the cutback tool to just hide everything, So exactly. So this is what you have to work with, right? You don't see anything else. You see your trigger, and you start going in, right? So you go into the 45-minute, the 30-minute, the 15-minute, and then you're looking for a fair value gap, and that will be your entry, and it'll be somewhere between the 05 and the O, correct?
Yep. And assuming that if it does enter higher and then go to target, then it's trade off, because sometimes it does just hit the one. So,
And that was going to be my follow-up question. If you find yourself in a situation where, okay, shit, it's hit the one and I haven't been able to get a low enough entry, then you just leave the trade, right?
yeah, game over. Yep.
Yeah.
And you're just not in it anymore, and you wait for the next one.
Was
Have
this
you
on the 90
guys-
minutes? Sorry.
Have you guys ever looked at Winter Mute?
Winter
Who?
mutes?
One of the bigger market makers in crypto is probably the next domino to fall.
Really?
It's showing signs
Good.
of imploding.
More bearish action. Very good.
Well, I'll just put this image into the chat. Yeah, sorry, I'm hella tired. This is all their holdings they've actively been sending to exchanges to try and sell so far.
Okay.
That's like the last 24 hours. Of course, it's 25, I know, but like within the last day, let's say.
It's possibly also fair to say that they know exactly what the charts are telling us all, and that's that we've got unfinished business to the downside. If you're a market maker right now, wouldn't you just get rid of your assets, because you are making the market? We're guessing that we go down first and then up. They are going to move us down. And
Yeah,
then
but
up.
they're also moving the USDC, so it looks more like liquidation.
Or they're going back into stables so that they dump down,
No.
they rebuy.
They're also moving their stables to the exchange because they're no longer market making it.
Maybe.
Normally, you don't have to send it to the exchange for that.
I'd be more worried if they take their stables out of the exchange.
Yeah.
Because if you want to pump price, and let's say you get out now, and then we have another correction. Let's say Sol goes down to $100. If you want to lift it back up from $100, are you better to OTC it, or are you better just to buy it on market?
I suppose. I'm just saying it's something that's out there currently. That's all.
Yeah, I reckon.
I'm just watching market makers ever since the FTX collapse and all that, and I'm just seeing this shit suddenly coming, and I'm just like, what's going on here, guys?
Well, it also builds the narrative, doesn't it? If you're going to dump the price to match what the charts are saying, then you need a narrative. The narrative could be the collapse. Oh wait, we're not collapsing. Back in we are. Like that gives you a rebound. I mean, just imagine if everyone had thought FTX was literally going to crash, and then the next day someone, credible turns around and goes, actually, jokes, not collapsing.
April's Fool.
Yeah, April
Millions
Fools.
lost.
Up we go. I would not put it past this industry.
All I'm saying is it's something to keep, not a real eye on, but just something to keep in the back of your mind. Like if the charts are telling you we're going down, and you have this kind of thing in the background, like nobody is talking about it, nobody is noticing it yet. It's probably maybe something they want to trigger. Who knows?
Yeah.
It will be viral when they want it to be, let's say.
Like I'm not saying it's some small exchange with $3 million worth or whatever. This is one of the very big market makers in crypto currently, so that's why I'm just throwing it out there.
Yeah, but that's why I like the high time frames. Going back to what Ali said, not trading it, but I like them for trend or for fulfilling moves that they have to play out. And if these narratives pop up, then it's easier to lean also to a bias that market makers like to play out the downside earlier than later. And so to me, it makes decisions for my currently skill level easier than when I always have to be afraid that things could pump out of my risk management, let's say. So because I'm not so big into scalping yet, I mean, I take trades, sometimes they play out in a few seconds and then I close them, but I'm still having those long runners, which I don't like, but I try to manage them. And so it's good to have a higher time frame bias. So I wouldn't basically trade on a monthly. That's where I would do spot action, spot selling or spot buying. But for only like raw, stable gathering through trading, perping, that's shorter time frame. But to have the higher time frame backing up your short term frame trade helps me at least for before I know a lot more and how to scalp better and reach candles better.
Yeah, I mean, for me, and I'm actually very interested to hear your point of view on this, Sindot, and maybe that'll be my last thought for the evening because it's fucking 2:30 a.m. over here.
Mhm.
I need to sleep.
130 here.
Yeah,
Same.
but
130.
so in trading and just in life in general, in work, let's say, I'm always trying to look for the minimum effective dose, right? Like, what is the maximum reward I can get for the least amount of effort? And not because it's a lazy way to think, but just because I'm always trying to conserve and protect time, right? And time, I think, is the most prized commodity, and we're all building or attempting to accumulate wealth so that we can get more time in our lives to do the things that we really want to be doing. And so when you're trading scalps and when you're trying to make these targets hit of 1,000 a day, 1,000 a day, 1,000 a day, it's amazing, and you can make a living off of that understanding alone. And I think that is a truly privileged position to find yourself in. If you can confidently trade the markets in that way, it's like having access to an ATM that just kind of prints you money, right? Assuming you've done the homework and you've really back tested the shit out of this and you've played this out 1,000,000 times, and it's just kind of as easy as slicing butter, right? But the question for me then becomes like, okay, you have this understanding now. You obviously don't want to spend 6, 7, 8 hours a day looking at the charts to trade these. So how do you emancipate the strategy and just find the minimum effective dose for maximizing your reward and minimizing your effort to say you're trading once or 2 times or 3 times a month and that's it? Is it just a function of the size of your position? Because it could just be, right?
Yeah.
Or are you looking to shift or adapt this strategy? Like where are you directionally thinking about all of this?
I mean, ultimately, I think with a large enough position size and a basic bot that looks at spot, just looks purely at spot, and with the highest time frame bias you can find, you activate it to long, and it just picks every long, and it just buys a portion, sells a portion. If it gets stuck in a small downtrend because it happens to buy at the top of a move and you haven't programmed it to deal with that, then who cares, because it's just one portion. That one portion will become unstuck, and you can't get liquidated because it's spot. And the next portion will enter. It'll buy the it'll buy the move, it'll make money. Eventually, it'll come back up after the accumulation phase, and it will take profit on that next portion. And then when you hit the highest time frame bias that you can find, you then check to see what the highest time frame bias is from that point, and you could potentially switch it into like a short spot scenario, and on it goes really. Like that would be a nice thing to achieve one day. Programming skills required. Don't have those. But yeah, or the other option is you just don't be greedy. $100,000 trading port. Just catch 1 times 0.5% move in a day, which is going to be pretty bloody easy. Get up in the morning, have a shower, have a coffee, jump on the chart, make $1,000, and move on with the rest of your life.
Yeah, that's the dream.
Yeah.
Well, guys, all right. I think how long have you fucking been doing this stream for?
Let me see. About
6 hours or
5.5 hours or something.
Jesus.
What? I was really late.
Yeah, we
Well,
started around 8:12 my time.
I know.
It's
I know
Yeah.
Simdot's on in ketosis, but I don't know how the fuck the rest of you guys have the energy.
Man, I'm about to fall asleep. I'm not gonna lie. I'm off to bed soon. I'm just waiting for the daily close. Honest to God, it's 20 more minutes.
Yeah.
Oh God.
I'm good. I rarely sleep before 3 or 4 a.m. So
Yeah, I'm waiting
Yeah.
for daily and see what the rollover of 24 hours and down does to us.
When you say
I'm thinking
rollover,
of
what are you
going
exactly
short.
referring to here?
Well, when you think about it, it's a time of day where basically everything daily and lower all closes at the same time. So when it comes to what's going to break, whether it's to the upside or the downside, you've got more things breaking at that one moment. And then of course the weekly becomes the next, and and so on, monthly.
Rolling over into higher. Yeah. Mm-hmm.
Yeah, so you might find that you break with a daily up bias, but possibly you end up with a 4-hour down bias at the same time. So the 4-hour down bias will probably be your retracement into the daily up bias. We've nearly got our TP on the next 30-minute trade we didn't take, guys.
the 5-day, because that's also very often referred to when I look into things, and it will also close in 22 minutes. What would that tell to you right on the chart? Because that doesn't look also well to me.
Yeah, I mean, every single time frame creates something. There's probably time frames you can't even put into TradingView, but yeah, they all create something. So I don't know. Let's have a look.
Yeah, I mean, that's the magic of fractals, that makes sense.
Like, I'm just looking at the 1 day, and if the close isn't going to go higher, I'm just thinking of starting a short. Not gonna lie.
Where did that 5-day go?
Or sleep.
Let's
Free
see.
profit
So
when I
real
wake up.
lid on 142. Like we're really in this tight 142 to 138 range right now.
Yeah, 5 days poked. So, the thing about the 5-day is when that closes, it creates a trade opportunity in this range down to that magic number called 133. It's probably not
that's
too.
also my target.
Yeah.
For
Which
2 or 3 days.
Lots of confluence around that
I-
level.
I actually think we're already in something deeper than that. Yeah. So our 6-day close has already got us to 129. So we're already in that. So that's we're pretty short right now. Like, if you look at even I mean, any of these moves were valid moves. Like, so there's 1 breaks 2, retest of the backside down to whatever we're on. So you just pick a time frame that you want to trade to, but as you can see, 2, 1, retest, down, target is achieved. 160 to 143 if you wanted to take a 6-day time frame. You could take the same trade on a 5-day, target achieved. Yeah, it's just, honestly, if I didn't have to do this with such high leverage to do what I'm doing, you just put buys and sells on all of these, and then win, win, win.
Why do you even use leverage instead of high